be. With that in mind, interesting to see S&P futures are pointing higher, up by 0.25%. The sentiment seems to be, or the story seems to be, that nothing has got materially better over in the Middle East, but things have not worsened perhaps over the weekend in terms of where the geopolitical story is shifting, at least away from the humanitarian toll, which is, of course, remains devastating. But this is what we see on markets right now. The dollar is at 149.93. It went through 150 against the yen, and that has sparked a lot more conversation about whether we see further intervention there. And they put in the US 30-year. We'll roll on and show you the futures, but the 30-year just in there, just to remind us that we're watching for that 230s part of the curve, and whether we see that go away from inversion territory and into positive. It's been trying to close in that area for a while. This is the futures picture then. It looks kind of mixed, actually. It was a little more positive just half an hour ago, but FTSE futures perhaps suggesting a little bit of negativity elsewhere, looking for some moves higher. So waiting for a fairly flat start perhaps for European equity markets, or maybe a bit of a positive in there as we try to rebound, as I say, from Friday's losses. The FTSE 100 down 0.1%. In terms of FX markets, the dollar is not all that much on the move this morning. The euro is a little bit weaker. The Swiss franc actually unwinding some of the moves higher that we saw there. And we're actually seeing that in some of the commodities where we'd seen money pushing prices higher essentially during last week. And we'll get into that conversation in a moment. But this is what we see right now then on equity markets, up by 0.3% on the Italy FTSE MIB. The FTSE here in London down by 0.2. So a pretty mixed picture really for European stocks. In terms of the commodities picture then, we see some of these gas prices going lower. WTI crude, Brent crude also a little bit lower. Interestingly, gold coming off those highs that we saw. Investors seem to be positioning themselves away from risk assets at the end of last week, and now we see some of that unwind just at the margin on this Monday morning. Let's have a look at the sector breakdown then and see where that takes us. Some of the weakness on commodities could be reflected, there we are, in energy stocks. So they're going down by 1%. Basic resources down by 0.6%. But most sectors are in positive territory, a few in negative, as you can see there, and we're pretty flat actually on the FTSE Europe 600, on the stocks Europe 600, sorry, pretty flat. The FTSE down, the CAC Caron a little more positive. So a mixed bag this Monday morning. Sam Unstead joins us from our Markets Today blog with his thoughts on the markets. And it's interesting, Sam, that we're seeing gold coming off recent highs. We're seeing oil coming off recent highs. Obviously, that's having a read across impact into stocks. But all of that, because we basically, investors didn't want to take on too much risk, I suppose, running into the weekend.
Yeah, I think that's right. And actually, I think what you've got is almost a carbon copy of last week. You know, so you had the risk premium going into the market. I think, as you just mentioned, actually, Anna, certainly from a geopolitical standpoint and from the standpoint of traders who are trying to hedge their own risk, things didn't get any worse over the weekend. Now, whether that remains the case over the course of the week, obviously very difficult to say, in fact impossible to say, but we had a very similar pattern last week coming out of the weekend, particularly on oil, the risk premium side to fade a little bit. It will be interesting to see whether that continues over the course of the week. Okay, and Sam, let's unapologetically dive into a conversation on the ECB, because we have a meeting on Thursday, don't we? And so it's going to be front and centre in terms of the central bank stories. And so there's a couple of different angles here, and I'll start with what is being described as our colleagues as a €5 trillion problem, forcing a rethink at the ECB. And this is all about plumbing, really, is it? It's all about the way that we see transmission of the ECB's interest rate decisions into the wider economy. That's right. And I think this is the much larger question, right? So this is a question that, you know, Christine Lagarde said we probably won't get any kind of real answer to until next year. But the question now is how does the ECB shift its policy, and how does it ensure that the transmission remains the same, right? So there's the potential to do what the Bank of England does. There are a whole other bunch bunch of potential options that the ECB could follow, but this is the larger question. How do they shift away from that kind of crisis policy era and not impact too much on liquidity in the banking system?
Okay, so lots to watch there in terms of that longer term conversation. Back to the sort of nearer term, I suppose, or the current cycle. And there seems to be an expectation that we won't get a change in interest rates this week. We won't get a hike. But interesting story on the Bloomberg talking about how a lot of big money managers in Europe still see the ECB going higher here.
Yeah, certainly see that there's much more risk than at the moment the market is pricing in. So it's feeling that there's a little bit of complacency. Some of that is down to the being an energy importer, you know, and at the moment, as we've talked about a few times, both with gas and with oil prices, very hard to know where those are going to go in the short term, and oil prices are a lot higher at the moment. So yeah, you have a lot of, actually quite a large number of very large asset managers betting that probably not at the next meeting or this week's meeting, but that in the future there could still be another rise to come.
Okay, Sam, thanks very much for the update. Sam Unstead from our Markets Today blog. You can get more from the team that puts together that blog. Go to the Bloomberg UK website, click through to the blog from there, or you can go to TLIV Go on the Bloomberg terminal. Here is what we are watching out for this week then. Today, Euro area consumer confidence comes out at 3 p.m. On Tuesday, tomorrow, UK unemployment data is released. We had the wages part of that last week, of course. Now we get the unemployment rate. And over in the US, on the same day, we'll get tech giants Microsoft and Alphabet reporting third quarter earnings. On Wednesday, German IFO data comes out, and over in the United States, we get more big tech earnings. Meta releases its third quarter numbers to us. Then on Thursday, we'll be closely watching the ECB rate decision and the press conference that follows that. We'll see if we get clues on both of the topics that Sam and I were just discussing there. And later that day, US GDP figures are released. And on the final day of the week, we get the Fed's preferred measure of inflation, that is core PCE. I think we also get a Michigan consumer confidence reading as well. So a lot of US data to work through this week. Coming up on the programme, we'll look at your stocks that are on the move this morning, including Philips, after the company raised its full-year outlook on easing supply chain constraints. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything. Today, Bloomberg Bloomberg's Guy Johnson and Alex Steele sit down for an exclusive interview with Virgin Atlantic CEO Shai Weiss and Delta CEO Ed Bastian. The health of airline companies, the future of business travel, and headwinds facing the industry. Tune in today at 11:30 a.m. Eastern, 4:30 p.m. London time on Bloomberg Television. Context changes everything.
This is Markets Today. We are around 8 minutes into your European trading day, and the markets looking just slightly positive. The FTSE 100 down around 0.1%, but overall making some modest gains on European stocks this morning. Let us check in on the individual stocks then that are on the move. Joe Easton has a briefing. Joe, overall the story seems to be rebounding just a fraction from Friday's losses, but what do you see in the individual movers?
Absolutely. So one stock we've got our eye on is Philips. Now this one looking pretty volatile at the moment. It was down around 0.3%, now back to unchanged. They did raise their guidance earlier, but there's concern around the outlook over in China in particular. That's something that the CEO was speaking to Bloomberg about earlier today. So let's have a listen to some of those comments from the CEO of Philips.
It's to be acknowledged that the current state of the economy is under pressure in China. And that's also something that we see coming back through in our results. We started the year very strong in China. We saw a bit of slowing now into the second half. But actually, if we look towards the demand for healthcare solutions, but also the consumer strength and the demand for strong brands and innovation, actually we have no doubt that we will be continuing our growth trajectory in China. We also made sure that we can play locally because the rules have changed. You need to be local in your manufacturing, in your innovation, and in your delivery. And we made sure that 90% of our products are applying to those rules so that we can fully compete in the Chinese market moving forward as well.
Are you worried at all that that strategy is going to hurt you at the end of the day? I mean, Roy, I'm coming from an American kind of thinking, if you will, where a lot of people are actually coming out of China and nearshoring closer to home because they're worried that the manufacturing and the supply chains that have been built are actually in more danger. Seeing that even with the biggest companies like Apple, for example, pulling out of China. Why are you doubling down?
So for me, there are two parts to the story. One is China for China. So there is a Chinese opportunity of Chinese consumers that have specific demand and Chinese people that need healthcare. For those, we cater from China market for the Chinese demand. Then there is a global demand, and there we are regionalizing as well. So for the US market, for example, we have a very strong footprint in North America, but also in Mexico and even Latin America to make sure that we can also solve and serve closer to the markets. The same we have in Europe. So closer to end consumers and end customers is a new trend that we are catering for, and we're also setting ourselves up for success. You also saw with the improved supply chain delivery that actually the actions that we're taking on supply chain are having effect, but that does not mean that we can also play successfully in China for the future.
So that was the CEO of Philips there. Now that stock, as we say, is pretty much unchanged over in Amsterdam at the moment. The other big one in the healthcare space that we're looking at is Roche doing a $7 billion deal over in the US in terms of some digestive illness drugs. That one ticking higher by around 0.5%. Now some other healthcare firms standing out today. Indivior, this is a UK-listed drug company, sells into the US, settling a big law claim over in the US. Hundreds of millions of dollars they're paying to settle that dispute, but investors are liking that one. And Getinge over in Sweden, this makes ventilators, very strong results. There was worries that they would see a decline in that business, but that hasn't materialized. That one rising around 5% in Stockholm today. Then in terms of some of those auto stocks, we had that negative report from Volkswagen after the close of trading on Friday, and we're seeing that reflected in those shares, down 1.9%. They've cut their outlook once again for the biggest German automaker, and feeding through into Porsche that owns around 30% of that stock. So both of those shares declining today. And we brought up a couple of other stocks, both of these reporting earnings this week. So Volvo Cars and also Michelin, the tyre maker. Those are in focus over the next few days. So a lot of auto reports coming out this week, so we'll keep an eye on those shares as well. Finally, in the UK, we've got a couple of reports today. The home builder Vistry announcing job cuts as they move away from the private market. They're moving into affordable housing, and that one is declining around 4%, one of the worst performers on the UK market. But Keller Group, the engineering company, they do ground excavation projects into the train businesses, that kind of thing. That one jumping 10%. And Varta, these guys make the batteries that go into your Apple AirPods. There's a report saying that they've got a really strong order from an unnamed company. It's speculated it could be Apple, but that hasn't been confirmed yet. So that one's up around 9% in Germany. And finally, Adevinta, you might remember this one was in the press getting a takeover bid. This is a classified business company based over in the Nordics, but Bloomberg reporting at the weekend that the buyer is potentially considering pulling out of that deal, and that one is plunging down around 11%. That's Adevinta over in Norway.
Okay, Joe, thanks very much. Joe Easton from our equities team with a briefing on some of those stocks on the move. Let's think about where equities head from here. Sophie Lund-Yates joins us, lead equity analyst at Hargreaves Lansdown. Sophie, good morning to you. I wanted to pick up on one of the themes of the morning. We heard from Philips there, and supply chain issues being resolved, getting better, seems to be one of the reasons why they're able to be more positive. I wonder how much more you think we have around that particular theme to go. You know, we're some time after the pandemic, of course, and yet still businesses talking about supply chains getting back to normal.
Hi, good morning. Yes, unfortunately, there are still, logistically speaking, some problems to iron out, but I'm more in the camp to say that actually a lot of the unwind here, a lot of the positive changes and the getting back to normal, a lot of that has already been done. For me, the bigger problem or challenge or opportunity, depending on how you want to frame it, for me is looking at what the pandemic highlighted more broadly about supply chain. So you look at companies that now may be saying actually we are too reliant on one region, i.e. China, and actually how can we future-proof against further disruption, and whether there are going to be longer term shifts away from those kind of manufacturing hubs into new areas, and the degree to which that's going to happen, what it will cost, and how smooth those transmissions will be.
Okay, so we've got that structural sort of reshoring and the changing of the supply chain story to factor in, Sophie. I wonder what you think of is the relationship between stocks, and your area of focus is stocks, and higher yields, higher rates right now, because we focused a lot on the long end of the Treasury curve, but we've also seen here in Europe long end rates going higher, perhaps in sympathy with Treasuries, and we see that in the gilt market, for example. What does that do to appetite for stocks, do you think?
Absolutely. So, you know, we saw particularly at the tail end of last week that higher for longer narrative, I know we've been talking about it for a long time, that's absolutely seen Treasury yields in particular spike. Now, the problem for that is obviously me looking at this from the equities perspective is that the opportunity cost for investing in equities suddenly a lot less compelling. And I personally think that this spike and certainly the volatility, I don't think it's going to be going anywhere. So I do think that markets and individual companies, if we dig down to the next level of that, have got a lot of work to do to encourage investment, particularly if I was to paraphrase this. I think, unfortunately, we're looking at a situation where good is no longer good enough. And also, I think we're going to be seeing the fact that missteps or even performances in line with expectations, rather than kind of shooting the lights out, could actually be punished more severely. So it could result in bigger wins, but I think it could also make losses more likely as well. A lot more jumpiness in the investor base because of these yield dynamics that are going on.
Okay, more jumpiness, more volatility then, meaning changing the the opportunity cost dynamic as you set out then, Sophie. Let me ask you about where you see the consumer heading, and I suppose I'm thinking here about the US consumer, but perhaps there's a UK expression of this as well. When do we start to see real evidence of deterioration? Is that what you're looking for, and what is the timing around that expectation?
Absolutely. So this is kind of a tale of two halves, really. If we look at the US in particular, we know that the consumer has been really quite consistently very, very strong. And that is actually expected to continue as we look into Q4. So one thing that I draw on there is we know that Amazon has hired 100,000 extra seasonal workers compared to last year to deal with the Christmas rush. That is a company that is expecting discretionary spend and consumer resilience to continue. But, you know, bring that back over to the UK, as you were mentioning, we know that the UK Retail sales were disappointing on Friday. You know, a lot of people saying that actually the retail recession is already here. What I think for me is going to be very interesting is going to be the separation of spend. So I think that experiences and experience-led spend is going to remain a lot more resilient. Look at the performance of short-haul travel, for example. Whereas I do think that middle-of-the-range retail is actually going to be quite tricky. But I think that overall Q4 discretionary spend is going to be better than expected. But for me, it's going to be Q1 next year that I think could be really quite challenging for those players.
So Q1 is the time where things start to get tougher then, in your view. Let me ask you about the tech sector and its reporting that we're expecting this week. Sophie, you mentioned Amazon and some of the more positive signals coming through there. We're going to hear from a number of other big tech players. What are you expecting to be the big theme?
The big theme for me is, perhaps unsurprisingly, is going to be that consumer outlook. So it's not so much what's happened, but it's those outlook statements on what consumers are going to be doing. I think in a lot of spheres we are expecting a slowdown. For example, Apple net sales were down 1.4% next quarter. A little bit of sluggishness probably still coming through, but it's going to be the degree of that. And of course, couldn't talk about tech without talking about cloud. There's a big debate swirling at the moment about whether or not main consumers, customers of the cloud technology are in fact trimming their spend or not. I think we are likely to be seeing some cutting back there as the outlook is so uncertain, but I don't think it's going to be an equal trajectory for all of the players. I think potentially those starting from a lower base, i.e. Google Cloud, could have further room to run there.
And I know we just had a graphic up that said one of the themes could be AI. And Sophie, I know you have thoughts on this because we focus a lot on the opportunity, but you're thinking about the cost, the investment that's going to be required to keep up in this sort of AI race.
I am indeed, and not to be too square about it, but unfortunately I do think that with this AI boom and the huge excitement around it, I think fundamentals are slightly being left by the wayside. For me, I don't think that the enormous cost and margin erosion that is possible is currently being fully priced into all tech stories that are chasing this AI boom. And particularly when we look at a lot of the software players in the tech space, those enormous operating margins are a cornerstone of the investment case. Now, I'm not saying we're going to be seeing a reversal of investment cases, but I do think some rethinking and some realignment that in the way that we're assessing margins and spend, particularly R&D spend, is going to need to be priced in at some point.
Okay, thanks so much, Sophie. Good to speak to you. Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Coming up on the programme, we'll focus back in on China. China rattles foreign firms again with a series of arrests and an investigation into key Apple supplier Foxconn. The details next. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today, 8:23 here in London, and European equity markets pretty flat this morning after heavy losses on Friday. Chinese authorities are again shaking the confidence of foreign companies in the country with a series of arrests, as well as an investigation into Foxconn, that is Apple's most important partner and one of the largest employers in China, of course. Let's get more with Bloomberg's Peter Elstrom, who joins us from Tokyo. Peter, what do we know then about this latest probe into Foxconn, and why is it significant?
Yeah, this is not a one-off, the investigation into Foxconn. We saw China investigate consulting firms, including Bain, earlier this year in China. We saw them go after pharmaceutical companies. In addition to that, over the weekend, we heard about WPP, the British advertising company, having some of its employees arrested. And now we have Foxconn. As you mentioned, Foxconn is not just another company. Foxconn is the most important partner for Apple. It makes the vast majority of the iPhones in China. For Apple, it's an enormous employer, and historically it's had very, very close ties to the Chinese authorities. So hearing about this investigation is important. Authorities are looking at the taxes of Foxconn and also its land use. They're trying to figure out exactly what's going on with those two issues. But it's critical for Apple because Apple gets a large percentage of its revenue from China. It produces all these iPhones in China too, and it's not exactly clear where Hanhai and Foxconn are able to go from here with this investigation.
And what kind of concerns does this raise then for foreign companies in China?
I think more broadly, the Chinese authorities often don't explain what these investigations are about. You don't know exactly what the charges are, what their ultimate goals are here. So that opaque approach to this regulatory issue has created a lot of uncertainty around this. In the case of Foxconn in particular, this comes as Apple is under quite a bit of pressure in the market. Apple competes with Huawei in the market. Huawei is the Chinese company that had been blacklisted by the U.S. government. It effectively had been knocked out of the smartphone market until it was able to come up with these domestic chips made by one of its local partners, and now it's getting back into the smartphone market. That's creating a lot of competitive pressure for Apple in particular. At the same time, we've reported that Apple is facing an extended ban on the use of its iPhones in certain government agencies and state-owned enterprises. So there's a lot of pressure on Apple. Last week, we saw Tim Cook actually go to China and speak with the authorities there, speak with some of its partners there to try to foster that relationship and make sure it's as good as it can be.
Peter, thanks so much for the update. Bloomberg's Peter Elstrom in Tokyo with more on that important story around foreign business and how comfortable it feels in China and that probe into Foxconn. Plenty more still ahead. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
This is Markets Today, 30 minutes into your European trading day. Here are your top stories. Israel is said to hold off on its ground invasion of Gaza amid diplomatic efforts to secure the release of more hostages. Elsewhere, European equities struggle for direction as China drags Asian stocks lower after Beijing launches a probe against Apple supplier Foxconn. Plus, Philips raises its full-year outlook after the supply chain constraints ease. The CEO, Roy Jacobs, tells us the company will continue its growth trajectory in China. Welcome back to the program, everybody. Let's focus in on the markets for the moment. And you can see we are, as I mentioned, searching for direction, perhaps finding a little downward direction just in the last few minutes. Down around 0.3% on the FTSE 100, the Stock 600 down 0.2%. So we do see some modest losses coming through. And this after the losses that we saw actually during Friday's session. So during Friday, we were down by more than 1.3% on many of these markets. And so we had an expectation that we'd bounce. US futures, though, I can tell you, have deteriorated. And that seems to be one of the driving forces then behind this deterioration here in Europe as well. Let's look at the sector picture for European stocks. And if overall we are heading lower, one of the areas of weakness we saw the last time we checked in here was around energy. And I can see that once again down by 0.4%. That's not the worst performing sector, though. In terms of the sectors, real estate, basic resources, utilities, quite a few. In fact, 2/3 of sectors are in negative territory. 1/3 of sectors moving higher. Retail is the best performing sector, up by 0.8%. But generally, the picture is one of stocks moving lower. Let us turn to the geopolitical developments in the Middle East over the weekend. The timing of a ground invasion into Gaza remains uncertain, as Israel's support for diplomacy to release hostages is said to possibly delay or maybe alter Israel's plans. Meanwhile, US President Joe Biden and Israeli President Benjamin Netanyahu pledged a, quote, continued flow of critical assistance into Gaza after the first 2 convoys crossed from Egypt. Let's talk now to Sarah Bazubandi, who is a research fellow at the German Institute for Global and Area Studies, which advises, is part of its role, advises the German Federal Foreign Office. Sarah, thank you so much for joining us. Very good to have you with us. And a lot of people are watching to understand what Iran will do here, what Iran is motivated to do, and how much it wants to get involved. How much do you think Iran wants to get involved here, and how much will Iran be okay with allowing Israel and Hamas to fight, and Hamas to fight on its part?
Well, Iran has been a supporter of Israel's regional enemies for many decades. Hamas, Hezbollah, amongst the most prominent groups that have been imposing threats on Israeli security, and through various forms, from financial supports to providing weapons to providing training and so on and so forth. There has been various pieces of evidence confirming this relationship. Whether Iran has been directly involved in this particular episode or not, there is not sufficient evidence to confirm that. But the the position that the Iranian government has taken, of the official line that they have taken so far, has been to express that they had absolutely no influence, no role in this October 7th attacks on Israel. The Supreme Leader, as few days after the attacks, came out and clearly stated that despite the fact that many people around the world are thinking we had anything to do with this, but this is purely Palestinian freedom fighters and so on and so forth, and he praised the Palestinian terrorists and so on. So Iran has had a link with this episode, but has tried to officially distance itself because of the potential consequences that this could have.
And I wonder, yes, and so that's the past. I wonder where Iran goes from here, though, Sarah, because there could be ideological reasons for getting involved, but I wonder underneath those, the sort of realistic and economic reasons, what is in Iran's best interest? Because at the moment it is sanctioned by the US, increasingly so, but it can trade with China and Russia. So I wonder how all of those add up to what is in Iran's best interest. How should we predict Iran responds?
There are two major aims in Tehran from any form of involvement in crisis across the region. One is this world vision that exists amongst the Iranian political elite, that the world order is changing, the US and its allies are declining across the world and their influence and their power, and on the other hand, the Russians and the Chinese and the so-called Eastern powers are rising. So in this change of order, Iran as a middle power aspires to project power, to gain importance and significance in global strategic and economic and political calculus. That's one aim. The second aim is that in every negotiations with Iranians over the past 2 decades or so around a nuclear file, there has been, which, by the way, the entire relationship with Iran and engagement of the international community with Iran has been formed around this issue of nuclear file. Nuclear file has dominated every conversation with the Iranian authorities. The strategy that the Iranians have pursued in those engagements have been through multiple bargaining chips that they obtain from engagements in Syria, from engagements in Iraq, hostage taking. This could be used as a bargaining chip, as a so-called quote-unquote brownie point for the Iranian government in future engagements with the Western powers, specifically through the format of the nuclear file, in my opinion.
Okay, and Sarah, what about their attitude to energy markets and their willingness to get involved and disrupt global energy markets? Because that seems to be one asset that's being watched very closely right now, is whether Iran will will take action on that front, will try to disrupt flows.
There are two major areas that are going to be affected in this crisis. One is through the Red Sea, East of Africa, Suez Canal and Mediterranean, and the other one is through Persian Gulf and Strait of Hormuz. Iran directly could possibly interrupt flows through the Persian Gulf, but that in the current climate, considering Iran doesn't want to jeopardize relations with Saudi Arabia, very recently the two countries reestablished their diplomatic ties. Most of Iran's energy trade also goes through that body of water. So it's amongst the possibilities, I would say that's the least likely scenario that Iran would want to actively disrupt energy trade from that specific body of water. But in Red Sea and up through the Suez Canal, specifically with the presence of the U.S. warships in the Mediterranean area, we have seen already some attempts, not directly by Iran, but proxy groups that have had traditionally links with Iran, for example, the Houthis in Yemen. So in my opinion, that part is the area that should be watched, and it could be the more volatile area in comparison with the Persian Gulf.
Okay, really interesting. Thank you so much for your analysis, Sarah Bazubandi, Research Fellow at the German Institute for Global and Area Studies. Thanks very much for joining us. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
This is Markets Today, 41 minutes into our European trading session, and sentiment deteriorating, it seems, this Monday morning here in Europe. Stocks trending a little lower. Let's go to South America, though, for some political updates. Argentina's presidential election will be settled in a runoff after a surprise lead by the economy minister, Sergio Massa, in Sunday's vote. For more, here's our reporter, Patrick Gillespie from Buenos Aires.
Markets in Argentina on Monday will wake up to one of investors' most feared scenarios from the country's presidential election on Sunday. Economy Minister Sergio Massa is heading to a runoff vote on November 19th versus outsider candidate Javier Milei. Massa pulled off a major comeback Sunday by winning the general election with 36% of votes, while Milei actually lost some momentum, receiving 30% of votes. The pro-market candidate, Patricia Bullrich, was eliminated from the race after only securing 24% of ballots. Now Argentina will choose between Massa, who oversaw Argentina's economic crisis marked by strict currency controls and capital restrictions, versus Milei, who wants to change Argentina's currency from the peso to the US dollar. That's a proposal that many economists say would create hyperinflation. Whether Massa or Milei, Argentina's next president will inherit titanic challenges. The country is heading into its sixth recession in 10 years. Inflation has pushed 40% of the population into poverty. And still, Argentina owes $44 billion to the International Monetary Fund, and its current agreement may need to be renegotiated yet again. Looking forward, a big question is the city of Buenos Aires. Patricia Bullrich won 40% of the votes in the capital, so where her voters go during the November 19th runoff could decide who is Argentina's next president. Reporting in Buenos Aires, Patrick Gillespie, Bloomberg News.
Time now for a Bloomberg Big Take story. Across the $100 trillion asset management industry, money managers are facing a dire situation. That is as the unprecedented run of bull markets that's buoyed their investments comes to an end. Joining us now is Bloomberg's asset management reporter, Lucia Giftopoulou. And Lucia, good morning to you. Why are active managers then challenged now like never before, according to your analysis?
Well, Anna, they have been challenged for at least a decade. The problem is that in the past decade, we're in rising markets, so these kind of life-threatening vulnerabilities did not really show because their revenue was helped by the bull markets, by the rising markets. Now we're at a situation where there's no more easy money. We have geopolitical tensions that are becoming the status quo and higher interest rates that seem to be here to stay. And we're entering a period where markets are not going to be helping their revenues. Meanwhile, these guys are leaking money left, right, and center because investors have largely abandoned them for cheaper passive products. And they find themselves in situations where if revenue stops being helped from rising markets, they have a bit of an issue.
Right, yes, absolutely. So the confluence of a number of factors coming together to make life difficult for them. What are they doing to try and reverse this picture? I spoke to one CEO of a money management business recently, DWS, and he was saying, putting a lot of focus on private markets. What is being done in that field and elsewhere?
Well, the DWS CEO who spoke to us for the story basically said, no, active management is great, but it's not getting any more money. All the money is going to passives and alternatives, private markets, which is private markets is what everybody else is doing. And this is an issue for the industry that to differentiate itself now and in the past years, all these companies have been doing exactly the same things. So they end up looking more alike than before and think it's not giving them an edge. Now with private markets, these are higher fee products which could likely help, but it's very hard to build scale, especially if you're not an established private credit, private equity player, or a well-known alternatives manager. So they will have, if you manage 1 trillion and you have a very good 5 billion private credit fund, there's not much this fund can do to stop the outflows from across the rest of your business. So while it might help short term, longer term, I think there's a consensus in the industry that is not going to be the differentiating factor that saves them.
Yes, I wonder if M&A is part of the solution, and is this going to become existential for some of these firms? Could it tip some of the firms over the edge?
It could. If we enter a period of long bull markets where the revenue is not being helped again by, of long bear markets, where the revenue is not being held by shares and bonds going up, then yes, many of them will suffer because they're losing money and there's nothing, that their margins are squeezed and there's nothing to make the business grow. M&A, sure, has been tried and on many occasions failed, but it's something that will keep happening. But many of these companies, I think, is the general consensus across CEOs, consultants, and everybody else in the industry that many of these firms could actually die.
Lucia, thanks very much. Thanks for the update. Lucia Giftapoulou with the Bloomberg Big Take story. Coming up on this programme, we'll discuss where the markets are. Treasury curve uninversion, that is the focus, certainly at the 230s horizon. We'll talk to the Market Live team's Ven Ram about that, what it does and doesn't mean. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg Context changes everything.
This is Bloomberg.
I think the market is absolutely right in thinking it's the minimus probability that we get a hike in November. You know, John, it's good and bad news that the Fed is going quiet. It's good news because they've added to the instability. I was really intrigued yesterday during the event at the Economic Club of New York. When the speech was released, the 10-year went down below 490 and stayed there as Chairman Powell was reading the speech. And then when the Q&A started, it got crazy. We saw it go all the way up to 499 and then come back down. And it just shows you that right now, it's very hard to strike the right balance when you're talking about monetary policy. So it is a good thing that they are going quiet because that's a source of instability. But fundamentally, we need them to stabilize the bond market. The bond market is critical, as you know, for other markets, for the housing market, for the economy, and all this in the US and beyond. And we're not going to get stabilizers from the technical side. We're not going to get stabilizers from the economic side. So we desperately need stabilizers from the policy side.
Well, let's talk about where we've been. We were at 330 on a 10-year in spring of this year, following the collapse of a couple of big banks. Mohammed, since then, we've added about 170 basis points. The question we've had of Fed officials now for weeks is whether that's a substitute for further tightening. Haven't they basically said that it could be, or at least on the margin?
They have, but they don't quite grasp that there's a big difference between the market tightening the long end and they acting on the front end. And just look at the shape of the curve, look at what has happened to US 10-year yields relative to Germany. That differential now is at 205 basis points. It's almost double what it was 12 months ago. So yes, it tightens, but it also, and that's what the markets are really worried about, it also opens a bigger scope for accidents, for something breaking. In fact, I'm quite struck by how often that phrase, something breaking, has been said on Bloomberg TV and elsewhere.
Well, let's get into that. The question I've asked a few times this week, Mohammed, I'd love your response to it. Do you think we've fully realised the pain associated with the losses in the long bond? Not just in the Treasury market, but also in bonds, in gilts, worldwide.
We haven't, John. It still hasn't gone through the system. You know, this morning, the 30-year gilt is at a level we haven't seen since 1997 at 5.15%. There are people holding these instruments, and some of them have to be repriced, and there will be implications to that repricing. So we haven't. You know, the biggest risk, and you and I have talked about it, is that what has been relatively contained interest rate risk becomes credit risk and liquidity risk. That is the one thing we want to avoid. And the longer the instability in the bond market continues, the longer we lack anchors, the greater the probability of interest rate risk contaminating other risk factors, particularly credit risk and liquidity risk.
Bloomberg opinion columnist Mohammed El-Erian there on the US economy and the Fed's path forward. Let's stick with US markets and talk about what's happening in these markets with Ben Ram from the Markets Live team, who joins us now from Dubai. Ben, very nice to speak to you this morning. So let's start with what's going on the Treasury curve. We talked about this a little with Mark earlier on, and I know Mark Cranfield has been writing about this. You've been writing about this on the MLive blog this morning. There has been a lot of focus, of course, on inversion in the curve, and people say it's not the inversion that matters, it's the re-steepening you get after the inversion. Well, we seem to be re-steepening now, and so for many that means, well, we're heading right into a recession. You don't share that view. Why is that?
Morning, Anna. Absolutely, a re-steepening and that causes the curve inversion to disinvert is usually a sign that we are already in a recession, but not this time. Why is that so? Generally, what happens when a recession is that the traders make a dash for the front-end notes, meaning those yields crumble faster than to the 10-year yield, and therefore that re-steepening happens because traders are preparing for the Fed to start cutting rates. However, what we are seeing this time around is markedly different. How is it different? Because it's not the front end that is rallying, it is rather the long end is selling off. That long end is selling off for different reasons. Higher neutral rate possibly, and definitely because of a surge in real risk premiums. So that means that this curve re-steepening is not like the curve re-steepening of what we have seen historically. And therefore, that doesn't mean a recession. That's the big takeaway from this curve disinversion that we are seeing, at least in the 2-year, 30-year segment.
Okay, so for you, this disinversion doesn't mean recession because of the parts of the curve that are actually doing the moving and doing the disinversion. In terms of what's moved the long end, Ven, do you have it straight, as we've been weeks, months talking about this theme of higher yields at the long end of the curve? Do you have it straight in your mind? What is the primary driver here? Because there seem to be so many different reasons being given for what is moving the long end, and I wonder in that situation if any of them seem to fully explain events.
Well, I just wrote about it last week. In fact, I mean, when I looked at the, if you decompose the Fed 10-year yield, you could pass it into, you could break it out into 4 different categories. One is the short-term real rate. The other is the inflation premium. The credit premium, of course, for treasuries is 0 because that's the safest securities you can own. But what has really surged this time is the real risk premium. It's not inflation premium. Inflation, if you look at the break-even rates, inflation is pretty contained. That's what the markets are messaging. But what the markets are also messaging is that the choppiness associated with interest rates are going to be really high. That choppiness is what is translating into higher long-dated yields. And as long as that fear in the markets continues, that look, hey, we are in this uncertain environment where we don't really know. Are yields going to go back to the zero bound? Probably not. Are they going to stay around 5% for too long? Probably not. It's somewhere thereabouts. It's somewhere in between. And that fear as to where the markets are not able to pinpoint with precision, saying, you know what, this is where rates are going to settle in the long term, the equilibrium rate. They're not able to put a finger on that. And that fear is what is driving 10-year rates are higher.
Ven, thank you so much. Thanks for the analysis. Ven Ram from the Markets Live team. Remember, you can get up-to-date analysis and insight from Ven and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal. And we do see some disinversion of the curve today. If you look at the amount, we are seeing yields going higher at the 30-year. It is more than we're seeing at the 2-year horizon. So that continues to be a theme of this morning. European stocks then on the back foot with that in mind, watching closely what happens in the Middle East, of course, as we expect more European leaders on the ground today and tomorrow. US futures pointing modestly lower. This is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think they're much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and happy Monday. Welcome to The Pulse. I'm Danny Berger in London, in for Francine this week. Here's what's coming up on today's program. Israel is said to hold off a Gaza ground strike offensive as Palestinian aid and diplomatic efforts to release hostages accelerate. Treasuries and gold fall along with crude as oil's dial back hedges against an escalation in the Middle East. Plus, the yen briefly crosses 150 as divisions within the BOJ grow. Plus, shares fall in the public arm of a key Apple supplier, Foxconn, after Beijing launches investigation into its Chinese operations. It's another weak day for risk. Let's take a look at your European markets map because we are selling off. We were briefly higher at the start of the trading day, but we are now down for a consecutive third day. We were down for more than 1% in a row. We're trading at the lowest since January for European stocks. Last week was the worst week since March. It is clear the stress is in. DAX down 0.5%. FTSE 100 doing poorly as some of those commodities sell off too. Now, on the point of commodities, I want to take a look into oil because this is really a strong indication of how traders are trying to grasp, trying to handle the uncertainty of what happens over the weekend in the Middle East. For the second Friday in a row, we've had this huge breadth of call options for crude. In other words, traders are trying to hedge that there's an escalation in the weekend and that something happens that means oil spikes higher. Now, that's not what we're seeing today. Instead, we're looking at WTI fall back around $87 a barrel. You do have this hold off. We're going to talk to our reporters about this in just a moment of what's happening in Israel, a hold off of a ground invasion as more negotiations happen around hostages. All right, the other big market mover has been treasuries. Now, whether treasuries work for a haven, that is not so clear. What is clear is that the trade that is in is a steepening move. On 530s, we are now positive, just barely 2.3%. We've tried to go positive. We've tried to test this level for now 5 times so far this year. We haven't closed in positive territory since August of 2022. Now, this precedes a 2s-10s inversion, which historically also precedes a recession. But is this time different with the long end moving on supply and strength in the economy? Last market mover to show you is the yen. I have dollar yen here. In the early hours of this morning, we yet again crossed 150 per dollar. A lot of options build up around this level. That makes it hard to sustain above 150. We do have a BOJ meeting next week. The Nikkei reporting that officials are talking about a YCC tweak ahead of it. It's unlikely we're going to see intervention because MOF has been very clear. They care more about the speed than necessary a round number of 150. Okay, let's turn back to those developments in the Middle East because the timing of a ground invasion into Gaza remains uncertain. Israel's support for diplomacy to release hostages is said to possibly delay or alter its plans. Let's get to Oliver Crook, who is in Tel Aviv. Oliver, what is the latest on aid, the hostages, and the possibility of a delayed ground invasion?
Right, Danny, and as you say, all of these things are basically fundamentally connected, and the big developments over the weekend were the precedent that was set of 1, aid entering into Gaza, but 2, hostages being released. On the question of aid, the first development was 20 trucks on the first day that went through, which again, according to all the UN and all the other humanitarian organizations, is really a fraction of what is required to make a meaningful difference for the very, very challenging humanitarian situation in Gaza right now, where according to the authorities there, more than 4,500 people are now dead since the beginning of this. Really, the UN is asking for something closer to 100 trucks a day. On the hostage front, again, you had 2 hostages, Americans. It was brokered by Qatar, we understand. Hamas released them on quote-unquote humanitarian grounds. This is not exactly clear what that means and also why they were selected. But again, from the U.S. and from the Israeli standpoint, though this is a positive development, there's going to be more desired for that. And how all of this bears on the ground invasion or the incursion, which again, the IDF has wanted to keep a lot of latitude in terms of what that will actually look like, is still an open question. But we are now entering the 3rd week. The ground incursion has not begun. And in terms of the theater of war over the weekend, it has still been principally focused in Gaza, where airstrikes have continued to pummel the ground. However, we are seeing more and more activity in the north on the border with Lebanon, from which the Israelis have evacuated a number of civilians, more than 60,000 and 14 additional communities yesterday and today. So again, that is going to be one of the flashpoints to watch.
Oliver, what else are we watching in terms of significant events on the diplomatic front?
So there are the things we can predict and the things we can't predict. The one that we cannot exactly predict, but the one that everyone is watching, is the escalation threat, right? The United States, Anthony Blinken over the weekend saying that there is a fear and that there's an expectation there's going to be more attacks on U.S. installations. They're deploying more air defense forces to the Middle East. They're adding more soldiers apparently on high alert. The things we can predict, for example, in 30 minutes time, and I think this is worth noting, is the IDF is going to show a screening of footage taken from Hamas attackers in the south of Israel, 40 minutes worth of it, to journalists, and then it will release some portion of that into the public. This is significant for the question of temperature, rage, and anger, which is a huge part of this conversation on both the Israeli side and the Palestinian side and the rest of the Arab world. There is also the question of diplomacy. Mark Rutte, the Prime Minister of the Netherlands, will be in Israel today. He will meet with Netanyahu. He will meet with Mahmoud Abbas as well. And then we have Macron coming on Tuesday. And the final note, Danny, which has kind of been far from the front of mind for many people, is the economic toll of the war. We're going to be hearing from the Israeli Central Bank later today at 4 p.m. local time, going to get a rate decision. There will also be a press conference and also maybe an idea of what this looks like in terms of the economic toll now entering the 3rd week of war.
Yeah, and just on that, the shekel set for the longest losing run since 1984. Oliver, thanks for keeping us up to date on all of that. That's Oliver Crook live in Tel Aviv. Now, amid all this, Israel has warned that Hezbollah risks dragging Lebanon into the war, saying it responded after anti-tank missiles were fired from its northern neighbor. Now, at the same time, U.S. Secretary of State Anthony Blinken says there is a threat of Iran flaming the situation.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to. This is not what we want, not what we're looking for. We don't want escalation.
Joining us now is Bloomberg's EMEA News Director, Roz Matheson. Roz, what is there to know right now at this moment about Israel's warning on Hezbollah?
Well, what we've seen is, even as they're increasing their airstrikes into Gaza, and Oliver was pointing out that's picking up, we're also seeing an intensity in the north of Israel into the south of Lebanon. So we're seeing more skirmishes, we're seeing trading of fire, drones, and so on. And Israel warning, like Hezbollah, which is really occupying that area of Lebanon, and of course Hezbollah is backed by Iran, and saying back off here, because what they're really fearing is you end up with 2 fronts in a war. You have Hamas, you have Gaza, but also you end up pulling in Hezbollah. And we're seeing that those attacks are going further and further into the south of Lebanon, so further and further into that country. And that really is raising the possibility that Hezbollah gets properly pulled into a conflict with Israel.
And what are the significances of that, of having a northern front opened in this conflict?
Well, Hamas is one thing, but Hezbollah is actually another kettle of fish entirely. They're bigger, they're far more sophisticated, they've got many, many more weapons. I mean, they've got very, much better missiles for a start that could really challenge Israel and its Iron Dome air shield defense over major capitals and so on. And so Hezbollah is possibly a much more sophisticated challenge for Israel militarily, and being backed very heavily by Iran. Again, the concern is you end up in a direct conflict between Israel and Iran, which no one in the region really wants to see.
Right, it is that escalation risk that many, if not everyone, is concerned about. Roz, thank you very much. That's Bloomberg's EMEA News Director, Roz Matheson. Now, Haven assets are in retreat this morning after, as we've been talking about, sources said that Israel is said to be delaying its ground invasion of Gaza to allow more time for hostage negotiations. Joining us for more on the market moves is Bloomberg's Paul Dobson in Singapore. Paul, you have seen this clear come down in oil and in gold. How much of this is relief versus just a pause in volatility that is very likely to continue?
Yeah, good morning, Danny. So I think, it's a similar pattern to what we saw last Monday as well. On Friday afternoon in the U.S. session, everyone kind of holds their breath. They pick up the hedges in the crude oil, in the gold. Even in U.S. Treasuries, they lighten up on stocks in case, there's a big escalation or some change in the narrative over the weekend. Come back in on Monday, and things looking more or less the same from the big picture perspective with the provisos that Ross was talking about just then. Then the market lightens up again. But there's definitely a significant risk premium and fear factor priced into markets now over the tension in this situation and that risk of escalation that Ross was describing. The worst case scenario is still something that is very much at the forefront of traders' minds right now.
It's also probably worth mentioning copper, LME copper, is now trading at the lowest level since this past November, so maybe some growth worries also bringing in oil prices. But elsewhere, Paul, we also saw the yen go above 150. It falls back below it. Can we expect a BOJ intervention, or should we say, 150, a nice round number, but it actually doesn't mean too much?
Yeah, well, I think it feels a little bit like the algos in the market, the algorithmic trading programs are there looking to sort of get in before there might be any intervention from the Japanese authorities. Remember, the government, rather than the BOJ, is the one that gives that signal for the intervention and makes it all happen. They have been making noises that they're discontent with the moves. They talk about the pace of the move rather than the outright levels. And if you look at the chart, you can see it's been a very steady and gradual move right now. We did pop above 150, signaling further yen weakness right at the start of the session today, and rebounded from there. The way that the market is trading, it looks like it wants to carry on testing that level, at least for the moment. So far, the actual signs of action or intervention from the authorities have been pretty limited. So, still that kind of tug of war, that little bit of a poker game between the market forces and what the authorities might want to see.
Yeah, lots of testing ahead of next week's meeting. Paul, thank you so much for all of that. That is Bloomberg's Paul Dobson. Now, coming up, we're going to dive deeper into the market story, including the prospect of whether or not the U.S. can manage a soft landing for its economy. A question we've been asking, feels like decades at this point. All of that next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Regardless of the decision made at our next meeting, if the economy evolves as anticipated, in my view, we're likely near or at a holding point on the Fed funds rate as we accumulate more information on economic and financial developments and assess the effects of the tightening in financial conditions that's already occurred.
Cleveland Fed President Loretta Mester giving her view on rates as we head into the blackout week for the Fed before their next rate decision. Joining us now is Madison Fowler, Global Investment Strategist at JP Morgan at Private Bank. Madison, great to see you.
Nice to see you.
Look, it's been a ride, as it has been for a few years when it comes to yields. Bonds are supposed to be the haven class. They're supposed to be the thing we can flock to when we see crises like we've seen over the past 2 weeks, but that's not what we're seeing. Yields are charting higher again this morning. Where do they belong in a portfolio, especially when you're thinking about havens?
Sure, thank you. I mean, I think bottom line is we still do like bonds, especially as part of a multi-asset class, diversified, goal-aligned portfolio. But I do think it's important to acknowledge that the ride, higher in yields has been a really painful one for investors. Last year, it had to do with central banks recalibrating and hiking really aggressively to combat inflation. Today, we're in a different place where inflation's, much more under control. But you are seeing, I think, bond yields rise for a variety of reasons. We would put some of that in the fundamentals camp with better growth, shift towards a higher for longer stance from central banks. But then you also have, I think, this aggregate of higher uncertainty and higher term premium as well, which can be harder to gauge from an investor perspective. So you're looking at Washington dysfunction, higher fiscal deficits, technical factors really moving markets as well. I think, with the levels that we're looking at now, that's not to say we couldn't see further spikes, but I do think we are starting to look quite stretched. And so when we think about the long-term perspective for bonds, it does seem that now you are, I think able to achieve much better diversification, lock in higher yields for longer. And I think that still matters for investors.
It's interesting because of the factors you were describing of why yields have been charting higher. We've seen bear steepening instead of bull steepening. That's pretty classic of what we usually get coming out of a cycle where we look at 530s this morning. They're positive, have yet to close there. But do you look at that and say, okay, history is going to hold up this time, and when we get that disinversion, a recession follows? Or do you say because of the unique factors you were just describing, this time is different?
So, yes, there are unique factors at play with that higher uncertainty premium that's attached to the rise. But I think at the same time, we know that the yield curve is an imperfect predictor of recessions. And while it can predict recessions, the timing of that is very difficult to get right. And so I think when we look at what we're seeing from the economy today, we still do think that prospects are higher for a soft landing rather than not. That's not to say there aren't risks. And I think it's also important to talk about what a soft landing means and really define that. It doesn't mean a reacceleration in growth and that everything's rosy and everything's fine. We still do expect cooler growth and, moderating consumer, a slightly loosening labor market. But I do think that's very different than calling for an all-out stop in economic activity.
So I know you think equities have opportunity from here. Where is the opportunity, especially as we head into an earnings season, especially as we head into tech earnings? Where do you look to?
Sure. And so I think with that, you highlighted a really good point. When we think about future stock upside from here, we are very much focused on that earnings picture. So it's not necessarily from a dramatic re-rating in valuations, but instead from that underlying growth that we're now seeing from companies. On a sector basis, we still do think that there's opportunity in technology companies, but I think it's important to focus on reasonably priced technology. So you want to make sure that you're getting adequately compensated, for that future earnings. Secondly, industrials, which continue to be backed by a really strong fiscal impetus, both in the U.S. and in the Euro area. And then we'd also point out, I think, healthcare as a way of, I think, adhering to more defensive growth within portfolios as well.
So if we're in this world where you see equities offering opportunity, it's Monday, I'll find my words at some point, Madison, and also bonds being attractive with the yield you can get from them now. Can I go back to the traditional investing strategies? Can I go back to 60-40? Is that what's coming in 2024?
So I think the 60-40 offers a really great starting point for investors, and that remains true. And you can certainly achieve, I think, a higher return in a 60-40 today relative to where you could, call it 5-6 years ago. But that said, I think we are in a new regime now where you're looking at potentially higher growth, higher inflation, remaining at least sticky relative to the last cycle. And that probably means that you need to bolster that 60-40 with alternatives like real assets, like direct lending, that I think can offer some of that protection in the event that you see this higher inflationary environment.
Is there not a degree, though, which a lot of those assets are just risk, especially with something like private equity? I mean, is that not just one of the criticisms of it? It's just leveraged equities. That's all it's offering you.
But I think that's also evident in the return premium that's offered by those asset classes as well. And so when we put together our long-term capital market assumptions that look to forecast what different asset classes could produce over the next 10 to 15 years, yes, to an extent, you are taking private risk, but it is offering you a premium in order to do that above public markets.
Right. Okay, Madison, afraid we're going to have to end it there. Thank you so much for joining on this Monday. That is Madison Fowler, Global Investment Strategist at JP Morgan Private Bank. Now, coming up, Argentina's electoral excitement. We're going to get the latest from Buenos Aires. This is Bloomberg.
How are you doing today? As you can see, we closed position on Bitcoin. We made 1% from our open position. We hold it for about a week, and we made 1,000 pounds. Okay, guys, well done, all of you who decided to trade with me, who opened position. You made your profit. For some people, maybe it was the first time. For more experienced traders, it's basically your day trading job. Okay, I'll speak to you later. Stay safe.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
Markets in Argentina on Monday will wake up to one of investors' most feared scenarios from the country's presidential election on Sunday. Economy Minister Sergio Massa is heading to a runoff vote on November 19th versus outsider candidate Javier Milei. Massa pulled off a major comeback Sunday by winning the general election with 36% of votes, while Milei actually lost some momentum, receiving 30% of votes. The pro-market candidate Patricia Bullrich was eliminated from the race after only securing 24% of ballots. Now Argentina will choose between Massa, who oversaw Argentina's economic crisis marked by strict currency controls and capital restrictions, versus Milei, who wants to change Argentina's currency from the peso to the US dollar. That's a proposal that many economists say would create hyperinflation. Whether Massa or Milei, Argentina's next president will inherit titanic challenges. The country is heading into its sixth recession in 10 years. Inflation has pushed 40% of the population into poverty. And still, Argentina owes $44 billion to the International Monetary Fund, and its current agreement may need to be renegotiated yet again. Looking forward, a big question is the city of Buenos Aires. Patricia Bullrich won 40% of the votes in the capital, so where her voters go during the November 19th runoff could decide who is Argentina's next president. Reporting in Buenos Aires, Patrick Gillespie, Bloomberg News.
The latest there on the Argentinian election, again from our reporter Patrick Gillespie. All right, a quick check on Apple in the pre-market. We've seen its assembler, Han He. This is, of course, the parent of Foxconn. That fell 2.9% after Chinese authorities reportedly launched probes into Foxconn. This is according to the Global Times. Units there are going to be undergoing tax audits, and the Apple supplier's land use in some regions will also be reviewed. Now, it's important not to underdo how big Han He is to Apple. It is its biggest supplier, 55% of revenue coming from Han He. You can see that by going to SPLC Go on your terminal. Coming up, we enter the third week of the Israel-Hamas conflict. We'll discuss diplomatic efforts next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
New York City.
In London, in Sydney,
from Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Israel is said to hold off a Gaza ground invasion as Palestinian aid and diplomatic efforts to release hostages accelerate. Treasuries and gold fall, along with crude oil, as investors dial back hedges against an escalation in the Middle East. Plus, the yen briefly crosses 150 as divisions within the BOJ grow. Plus, shares fall in the public arm of key Apple supplier Foxconn after Beijing launches investigations into its Chinese operations. Happy Monday and a good morning to you. Welcome to The Pulse. I'm Danny Berger in London. Now, the timing of a ground invasion into Gaza remains uncertain. Israel's support for diplomacy to release hostages is said to possibly delay or alter its plans. Now, meanwhile, French President Emmanuel Macron and Dutch Prime Minister Mark Rutte will arrive in Israel in the next 2 days as a diplomatic effort to prevent the conflict from spreading continues. Let's now get over to Bloomberg's Oliver Crook, who is in Tel Aviv. Oliver, what is the latest on aid, the hostages, and the possibility of a delayed ground invasion?
So there were significant developments over the weekend, both on precedent on aid, in the sense that there was the first aid that crossed in, but precedent also with hostage release. And the hope is that that will accelerate more aid and more hostages. What we can say about aid is the first deployment was 20 trucks that crossed over the border with Gaza. Every sort of aid organization in the UN say that that is really a fractional amount of not only what is needed, but also what was going into Gaza. Previously, the UN would like to see something closer to 100 trucks a day. We know that Biden and Benjamin Netanyahu have discussed a continuous arrangement in which that could keep going. We've had at least 2 deliveries, and we're expecting more today. On hostages, as you mentioned, 2 released. It was brokered, we understand, by Qatar. Hamas let them go on quote-unquote humanitarian grounds, which we don't really entirely understand what that means, and also why those were the ones selected. And all of this, of course, Danny, bears on this notion of the ground operation, but it's also tied to other things. And the question is, they've continued the aerial assault. The theater of war is still primarily in Gaza, but we're seeing more and more activity on the southern border of Lebanon, where there's going to be more. There's been more and more skirmishes, and we've had tens of thousands of people that have been evacuated from the Lebanese border, from the Israeli side. And in fact, I've been living in this hotel for 2 weeks. The first part of the time I was there, I was meeting a lot of people that were evacuated from the south. Now we understand that a lot of the people that are there are the ones who have been evacuated from the north.
And Oliver, as I mentioned, we're going to see both the French and the Dutch leaders come to Israel. What are we expecting on the diplomatic front?
So those are, so as you say, Mark Rutte will be here later today. Then Macron will be here tomorrow. We understand also the Greek Prime Minister will also be here. And we expect some of the same rhetoric that we've heard from many of the Western allies of Israel, which is also unflinching support, but at the same time, the how they go about this operation in Gaza is going to be critically important. Another thing that we should mention, Danny, is that actually right now, as we speak, there is going to be more footage that is being currently screened to journalists by the IDF, 40 minutes of tape that came from the Hamas attackers that are being shown to journalists right now and will be eventually distributed, some portion of that out to the public, which is important because of the temperature and the tension and the rage that still exists over the attacks from about 2 weeks ago, which bears, of course, on the Israeli response. And we should also say that there is the rate decision of Israel a little bit later today, which will be watched closely. The economic side of this has not been sort of the primary focus, but we'll be hearing from the central bank about what the long-term economic consequences of this war will be, at least on the Israeli side. And there'll also be a press conference with some questions that will be taken there.
Right. Oliver, thank you very much. That is Bloomberg's Oliver Crook in Tel Aviv. All right, let's get you some other top stories on the Bloomberg terminal this morning. Greece's credit rating has been raised to investment grade by S&P. It's the first such move by one of the big 3 assessors since the country was shaken by a debt crisis more than a decade ago. Friday's decision puts Greece at BBB- with a stable outlook. The move also comes after the re-election of reformist Prime Minister Kyriakos Mitsotakis back in June. Now, in the U.S., House Republicans have set up a 9-man contest for the Speaker's post. It includes Representative Tom Emmer, an ally of ousted former Speaker Kevin McCarthy. Lawmakers are expected to start the election process tomorrow after McCarthy's removal earlier this month hamstrung Congress and halted fiscal priorities. The U.S. faces another funding deadline next month. Switzerland's right-wing People's Party has scored one of its biggest national election results. The SVP won almost 29% of the vote, allowing greater representation in the lower house. Key SVP pledges include limiting the domestic population to 10 million, reaffirming Swiss neutrality, and cracking down on legal migration. Now, elsewhere, the yen has briefly reached and breached 150 against the dollar. It's triggering speculation that the Bank of Japan could intervene to support the year's worst performing currency. Of course, it's now moved back below that level. Bloomberg's Ven Ram joins us more on this. Ven, is this just a factor of higher yields in the U.S. bullying higher yields in Japan? What is driving right now this continued test of 150?
Morning, Danny. What we are seeing with what happening with the yen is very much symptomatic of the bigger problem, which is that, as you mentioned, the real rate differentials and the nominal rate differentials. If you look at 10-year JGBs, you're getting less than 1%, and on the other hand, you're getting like 5% on treasuries. So that, and from the looks of it, it doesn't look like 10-year treasuries are going to consolidate their sell-off. I think that there is more to come as long as real risk premiums stay intact. I do think that 10-year treasury yields may head slightly higher from here. And what that means, of course, is that the differential is going to widen, and that is going to weaken the yen even more. That, of course, the Ministry of Finance doesn't like a weaker yen, but the Bank of Japan is nonplussed by it. So I think this is going to be a very interesting to see how this is going to play out in the coming months.
And on that, there was this Nikkei report that BOJ officials are pondering the question of whether to tweak YCC. It's not too long until we get a BOJ meeting. What are we expecting at this point, then?
They probably won't. They will probably decide to stay with rates as they are now at this month's meeting. I do think that, in December, the lay of the land may look rather different. I think the BOJ may tweak their curve control yet again. Remember that they did a similar thing in December last year. So that's when they seem to be wanting to catch the markets unaware, because December is typically a time when portfolio managers are winding down their positions and things like that. So I think that's probably the time frame we are looking at. But, for the yen to recuperate from here, recover from here, we need more than just piecemeal measures. What the BOJ needs to do is that they need to get rid of the curve control and also end the negative rate policy. As long as they don't do that, the yen will be on the back foot.
When it comes to the dollar, though, Ven, it has been gaining, but when you look at the run-up in yields, you maybe think there would be more strength. Is there some degree of exhaustion in bullish greenback?
Absolutely. I think that the greenback's resilience is kind of unprecedented. It's so late in the cycle. A part of that stems from the surging real risk premiums, which have buoyed 10-year treasury yields. And as long as that happens, as long as the U.S. economy doesn't roll over, and there are no signs yet that it is going to be the case, I think that the dollar will find itself bid, albeit it's a very late cycle bid. Therefore, I will expect that correction to happen once the U.S. economy rolls over, but it doesn't look like that point is now.
Ven, thank you very much for joining this morning. That is Bloomberg's Ven Ran. Now, coming up, China rattles foreign companies with a series of arrests and an investigation into Foxconn, Apple's most important partner. We'll bring you that story next on Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Conversations that matter and the insights you need. This is The Pulse. I'm Danny Berger in London. Philips has raised its full-year outlook after supply chain constraints eased, giving the Dutch company some breathing room from its costly device recall. Speaking to Bloomberg earlier, CEO Roy Jakobs says the company remains optimistic when it comes to operations in China.
It's to be acknowledged that the current state of the economy is under pressure in China. And that's also something that we see coming back through in our results. We started the year very strong in China. We saw a bit of slowing now into the second half. But actually, if we look towards the demand for healthcare solutions, but also the consumer strength and the demand for strong brands and innovation, actually, we have no doubt that we will be continuing our growth trajectory in China.
Roy Jakobs there, the Philips CEO, speaking to Bloomberg's Kriti Gupta. Now, in other earnings news, Europe's biggest car maker has trimmed its profitability forecast for the year after earlier hedging losses were compounded by higher costs and supply chain issues last quarter. In its prelim results, VW now sees operating profit level with last year. Joining us for what to expect from the German automaker's full results this week and other earnings is Bloomberg breaking news editor Leonard Kane-Sherper. So, Leo, we have these VW operating profits, the prelim numbers at least way below estimates. What was behind the miss, and what does that mean for their full set of results?
Yeah, exactly. It was one of those classic German ad hoc prelim profit warnings late on Friday afternoon. Basically, the key reasons were higher overhead costs at the VW brand. I know Volkswagen is trying to come up with an efficiency plan there, and it was also due to mainly a supply chain hiccup, I guess you could say, because one of the EV production suppliers in Slovenia was hit by flooding last month, and that was another factor here. And then looking ahead to Mercedes on Thursday, they will probably be scanned for any update on how demand is holding up in China.
We're also going to have some of Europe's biggest banks reporting: Deutsche Bank, Santander, Barclays. I mean, a lot. What are some of the key thematic things to be looking for?
Yes, exactly. So it's a pretty simple story when it comes to banks this earnings season. Basically, all those bumper profits that we've seen throughout the last quarters, they likely have peaked this year. And now investors' attention really turns to how geopolitical risks may affect credit quality and also profit margins.
And Barclays specifically, because that's going to be the first one we get. That'll be tomorrow. What's the focus?
So I think definitely the strategy review. They kicked off the strategy review earlier this year to eventually, lift that valuation to unlock value, as they would say, because Barclays is still trading at a pretty steep discount to US rivals, and investors will be very keen on getting an update on that front.
Okay, Leo, thank you very much for all of that. That is Bloomberg's Leonard Kane-Sherper. Now, elsewhere, Chinese authorities are again shaking the confidence of foreign companies in the country, The series of arrests, as well as an investigation into Foxconn, which is Apple's most important partner and one of the largest employers in China. Let's get more on this from Bloomberg's Peter Elstrom in Tokyo. Hi, Peter. Okay, what are the latest on these probes, and what is the significance of them?
So this comes after a series of investigations and arrests that have sort of unsettled foreign companies doing business within China. We had the investigations into consulting firms earlier this year, including Bain. We had the arrest of a pharmaceutical executive, too. And now we've got this investigation into Foxconn. Foxconn is not just another company doing business in China. It is the most important partner for Apple. It makes the vast majority of the iPhones that are sold out into the world. And it's an enormous employer within China, too. It employs more than 1 million people in different factories around the country. So this is a very serious investigation. Authorities say that they're looking at tax issues with the company and also land use within the company. It's not clear exactly at this point where this investigation is going, but the early signs of it kind of rattled investors. We saw Hunhai shares down in Taiwan, and then also another unit of Foxconn called Foxconn Industrial Internet fell its limit today while it was trading in China. So investors are taking this pretty seriously.
Are they taking it seriously just when it comes to implications of Hunhai and Foxconn, or is this more a concern in general for foreign companies who operate in the country?
Well, foreign companies, foreign executives certainly have been a bit on edge with some of these investigations and the arrests that we've seen. It does carry particular resonance for Apple. This is such an important business for Apple in particular. Apple's been under a fair bit of pressure within China recently. It gets about 20% of its revenue from China, so it's an important market for selling iPhones. Also, it's a very important production base. What we've seen is that Huawei Technologies, one of its longtime challengers, had been effectively knocked out of the smartphone market earlier. It was blacklisted by the US. It wasn't able to get the components that it needed really to be able to sell smartphones in China and beyond China. This year we saw that Huawei was able to get domestic supplies of these chips, so it's essentially getting back into the smartphone market, and there's a lot of nationalistic support for Huawei at this point, thinking that consumers should be buying Huawei phones because they're supporting China's technology efforts instead of, say, Apple phones.
That is an interesting point, Peter, the geopolitics that comes into this. I mean, is there any element to which the U.S. might look at Hunhai actions, Foxconn actions, and say, okay, maybe this is part of the tit for tat. This is a threat to Apple and American companies in China.
Yeah, we've seen some of those actions. We have reported that there's a broadening ban against Apple's iPhones within government agencies and also some state-owned enterprises. There's also a very interesting dynamic with Taiwan in the Taiwanese presidential election that's coming up. The founder of Foxconn, Terry Guo, is running for president. He is not a leading contender. He's one of the long shots for the presidency. But one of the key issues in that election is going to be support for China. And some people have interpreted this as a move by Beijing to try to gain some influence in that election and sort of signal that Beijing does have some influence over the economic performance of these Taiwanese companies. And when it comes to Taiwanese companies, there are very few that are more important than Foxconn for the economy within Taiwan and beyond Taiwan.
Peter, thank you very much. That is Bloomberg's Peter Elstrom in Tokyo after Hunhai traded lower by about 2.9%. More to come on today's biggest stories. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You have a supply-demand imbalance, and that's something that makes markets move. I think it is something that has to be watched very closely, and I think the Fed has an obligation to be ready to assure the liquidity and the functioning of the Treasury market. But as is always true, David, there's a difference between a volatile market in response to new information, when there's a lot of new information coming, and some of it may not be good. That's one thing. It's a quite different thing when you have a non-volatile, when you have an illiquid and not functioning market. I haven't seen evidence yet that that's where the Treasury market is, but certainly that's something that the Fed, and particularly its outpost in New York, needs to be watching closely.
Former U.S. Treasury Secretary Larry Summers speaking with David West, and maybe reflecting some of what Jay Powell said, talking about the long end moving higher on supply. All right, it's time for the Bloomberg Big Take now, one of the most well-read stories on the terminal. And across the $100 trillion asset management industry, money managers are facing a dire situation. The unprecedented run of the bull market that's buoyed their investments has come to an end. Joining me now is Bloomberg's asset management reporter, Lucia Giftapolu. Lucia, a really fantastic story. And I love this because it is a trend, right? We've long talked about ETFs, the passive funds, the cheap things, really challenging active asset managers. Why is the challenge greater now than it has been before?
Well, Danny, as you said, the challenges have been around for at least a decade. The investors have been largely ditching active mutual funds to go to cheaper passive products, and asset managers, active ones, have been trying to deal with it. But what helped these years were the bull markets that were buoying their investments and as a result keeping their revenues high. Now we're entering a new world where interest rates are high, there's no more easy money, and geopolitical tensions seem to be here to stay. So these guys have a bit of an issue because there's nothing to buoy their investments if markets stop rising, and there's no new cash going into their funds to offset the very heavy outflows that we're seeing across the industry.
It was interesting. I was just at a JP Morgan briefing for their long-term capital outlook, and they said, look, markets are about to get more difficult. The bull market is over. Therefore, you need active managers. You need hedge funds, kind of pitching for the opposite, saying that because markets are getting worse, that's when we can outperform. Are many managers relying on that, or is there anything more actively they can do to reverse it?
to be fair, this has been the narrative for quite a few years, that people will come back to us and they will need us when markets are more challenging. But if you look at the data, the passive products have been gaining more and more market share depending on whether markets go up or down. And they are about half of the money managed across active and passive funds in the US right now. 10 years ago, they were 27%. So it seems that people prefer to pay less money than trust the active managers. That of course, I'm here to be proven wrong, but that has been the narrative for quite a few years, and the trend has not reversed. So while it sounds like, it should or could be the case, the numbers are not necessarily supporting it so far.
And Lucia, I love how you described this in this story. It's a slow decline into a cliff edge moment. What tips these firms over the cliff edge?
Well, I think there's a general consensus across the industry that an extended bull market will tip many of these companies over the edge, because when your margins are already squeezed, M&A hasn't really worked. New strategies to give you an edge have made you all look more like each other than less. And then you have markets stopping to help your revenue and no new money going in. You can see how many of these guys that don't manage to differentiate or transform themselves might just gradually stop existing.
Right. Lucia, thank you so much. That is Lucia Giftapolu with the Bloomberg Big Take. You can, of course, read it by going NI Big Take on your terminal. A quick check on treasuries as we head to the end of the hour. We are looking at yields moving higher, a carbon copy of what happened last Monday when we got the reversal of a haven bid into treasuries. We are looking at a 530s curve, which is at the moment positive, trying to close into positive territory for the first time since August 2022. Apple also softer in the pre-market trade, down by 0.7%. China reportedly has started into a probe of Hanhai. That's, of course, of the parent company Foxconn. Up next, I'm sticking around. It's Bloomberg Brief with me, Manis Cranny.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Leaders of the US, Canada and France, Germany and Italy and the UK hold a call on Sunday to strategize preventing the Israel-Hamas war from spreading to the wider Middle East as diplomatic efforts continue to secure the release of more hostages. Oil and gold reverse their rally as treasuries fall, all ahead of a big week for tech earnings. Nearly $16 trillion worth of earnings hit the tape. And China cracking down on foreign firms with a series of arrests across the industry's probe into Apple supplier Foxconn. A very good morning. It's a mirror image of last Monday. Yields are rising. Curve steepeners are the trade of not just the month, but again, refreshing this morning, pushing higher on the steepeners. S&P 500 down 0.2%. We have wiped out October's gains. We were down 1% on Friday. And again, Mike Wilson warns over at Morgan Stanley, the view on profits, and you'll have nearly $16 trillion worth of equities coming with their prints this week, is too optimistic. You're going to have Amazon, Microsoft, Alphabet, along with Meta. So the big tech components are going to be there. It's certainly worth keeping an eye on what's happening geopolitically in China as you see arrests being made at Foxconn. Again, tech falls to a record low in China. So there is angst again in this sweeping broom of politics through private industry. Stock 600 down 0.25%. You've got a big deal for Roche paying $7 billion for a bid for Televan. And Philips, yes, the numbers on the top line, the guidance wasn't too bad, but of course the order intake was lower. Down 0.25% is where we stand on Philips. So again, we're barreling into the, I suppose, the beast of earnings. Danny, good morning.
Good morning, Manus. And it is really equities and bonds where the action is this morning. Everywhere else, it is uncertainty reigning supreme and fighting for directions. When we woke up this morning, early hours of Europe, crude was down decisively. That has ended just in the past 15 minutes. We're now little changed on WTI at $88 a barrel. There had been relief that a ground invasion seemed delayed in Gaza, but there is still plenty of concerns about escalation. RBC says for their part, should that happen, we'd add $10 onto crude, but the durability of that rally is uncertain. Yen, that did briefly pierce 150. It's back below that level. The Nikkei reporting that BOJ officials are looking at a YCC tweak for their upcoming meeting. And finally, Manus, we are so close to 5%. 4.9994% is where we are on the 10-year yield. As you say, it's a carbon copy of what we saw last week. Initially, a Friday rally in bonds turns into a sell-off that we undo most of that action. And the trade is in, Manus, on that front. You mentioned this. Let me show you it in the charts. It is the steepener trade. 530s is the latest part of the curve that is attempting a disinversion. I should say attempted. I shouldn't maybe say attempting because we are there. We have disinverted. We are at 3.2% on the 530. Should we close at that level, it would be the first time that this is in positive territory, Manus, since August of 2022. We've made 5 runs out of it. Will this one stick? And is 2s 10s next if it does?
Well, the people that I spoke to yesterday, you can imagine this sort of saying furiously on a cross trader going, do you think term premium's high enough? No, they reckon they're going to push it up and over. Do you think the steepeners will run out of breath? No, they think that they will continue. Why? Because the asset managers, this delusion that we have in media world, that the asset asset managers and the insurers will come in and buy duration. They do not have the convexity. Yes, don't get me to define convexity. They just don't have the appetite and the convexity to step in here and to buy these bonds. So these steepeners will run. And that is official from a treadmill near you on a Sunday afternoon in New York.
I love that, the treadmills where all the action happens. All right, Manus, let's turn to some of the developments in the Middle East, because the timing of a ground invasion into Gaza remains uncertain, as Israel's support for diplomacy to release hostages is said to possibly delay or alter its plans. U.S. Secretary of State Antony Blinken spoke yesterday on the risk of escalation.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to. This is not what we want, not what we're looking for. We don't want escalation.
Those comments by Antony Blinken came after Arab leaders met in Egypt over the weekend. Bloomberg's Oliver Crook is in Tel Aviv for us. Oliver, it's been a significant few days, as it has been weeks. Where do we stand today?
So a few events without precedent that happened over the weekend, which we should bear as fairly significant developments. The first, of course, was the hostage release of 2 hostages, U.S. citizens. Understand that it was brokered by Qatar. And again, not clear why they were released. Hamas said on humanitarian grounds, not sure, no one is exactly sure what that means or why it was them. And then the other event was that aid finally crossed into Gaza, 20 trucks worth of it for the first delivery. There was a second one on Sunday, but again, not seen really as enough. The UN is asking for something closer to 100 trucks a day in order to make a meaningful impact for a humanitarian situation that has swiftly degraded. In terms of the latest with the war and what we've had over the last couple of days, the main theater of war remains in Gaza. There has been repeated pummeling by Israeli forces from the air into the ground. But there is also more fighting going on in Lebanon, and the Israelis are evacuating more and more civilians, tens and tens of thousands of them, from the Lebanese border. And just anecdotally from being here in Tel Aviv, where you're some distance from these front lines, the hotel where I'm staying at 2 weeks ago, it was mostly people who had evacuated from the south. Now, more and more, it's people who are evacuating from the north that are staying there.
And this is the escalation by the proxies from Iran, and that is perhaps their biggest concern of all. Multiple fronts is what the Israelis don't want to be battling on. Ollie, also the narrative seems to have adjusted in terms of the ground invasion. Is that in hopeful anticipation of further hostages being released, or is it a full-scale review of what Israel does next?
I think that, so again, I think it's very difficult to guess what Israel is going to do next and how all of these inputs come in there. From our reporting, we understand the hostage conversation and the backroom diplomatics are definitely playing a role in this. But remember, Manus, this is a very complex equation, and the result is, for the Israelis, without a doubt, the dismantling of Hamas and the neutralizing of its military capabilities. However, all of the inputs of this equation are, yes, the hostages. It's going to also be aid as a result, but also there's the moral imperative of minimizing civilian casualties, but also the political imperative of having to do that in order to have continued support from the international community. And as you mentioned there in the introduction, the Arab summit over the weekend, I want to read you something because we didn't get any sort of real concrete outcomes there, but there was a real voicing of different views on this. And we heard from King Abdullah of Jordan, the message the Arab world is hearing is loud and clear. This is from the Western world. Palestinian lives matter less than Israeli ones. Our lives matter less than other lives. And that is a very dangerous message to get out. That is what he said. Of course, the Western participants of this summit said, listen, we have full support of Israel. However, they need to conduct themselves within the parameters of international law.
So, Oliver, what will the next 24 hours bring? What does it look like?
I think that one of the things, or things we can predict and the things that we can't, things that we cannot predict but we really need to pay close attention to are what Blinken was warning about, more attacks potentially on U.S. military installations. They're sending more air defense units into the region, putting more soldiers on high alert. So that will be one of the things we watch. In terms of the things that we can anticipate, right now as we speak, there is a screening going on for journalists of footage that was collected from the Hamas attackers. A huge volume of that is being shown to journalists right now as we speak. Some of that is going to be released. Again, what is all down to temperature and rage and anger, this is going to be part of the conversation. On the diplomacy front, we have Mark Rutte, who is going to be here, the Prime Minister of the Netherlands. He's going to meet with Netanyahu, but also Mahmoud Abbas. We await Emmanuel Macron, the President of France, who will be here tomorrow. And then the final thing we're going to watch, again, this has been sort of on the back burner, is the economic consequences of this war on the Israeli economy. We have a rate decision from the Israelis. A little later today, there will be a press conference where there will surely be a lot of questions about what the longer-term economic impact of this war is 3 weeks now into it.
That was a pretty powerful speech by King Abdullah, and it's certainly one that is worth watching, because he talks about the rage, and he talks about this not being what must dictate what happens next, and the status quo. So certainly a very big insight there. Oliver, thank you very much. Oliver Cook in Tel Aviv. Dana, we need to circle back just to the main mover in these markets, and it is, of course, 10-year government bond yields. They've now topped 5%. They were just kissing that level, as you said a little bit earlier on. So we're above 5% for the first time since 2007. So this is, again, joining the multi-decade highs, and again, being pushed along by these curve steepeners that you so clearly identified, and we're turning into positive territory there, potentially on some of those curve disinversions. Let's pivot to China. The authorities there are again shaking the confidence of foreign companies with a series of arrests across industries and an investigation into Foxconn. That's Apple's most important supplier. Joining us now with the details is Alex Webb. Alex, we had this sort of massive investigations into wealth management, into financial products, and really the world had thought that we'd moved past massive intervention. But these latest probes may say something quite significant about the zeitgeist of China. Good morning.
Yeah, so the main one really here is the Foxconn investigation, and as ever, the regulators tend to be relatively coy about the exact reasons for what's going on. What local media are reporting is that they are conducting tax audits into Foxconn and reviewing its land use. There is also an investigation into some employees' LPP. That's to do with media purchasing. Again, we don't fully know the details. The Foxconn one really is the big one right now. We've seen a certain amount of pushback towards Apple. Of course, Apple is Foxconn's biggest customer. They make iPhones as well, of course, as PlayStations and plenty more besides. The question is whether this is really about targeting Apple and its supply chain, or there could be a Taiwanese political element here. Terry Gu, the founder of Foxconn, is running to be president of Taiwan. So is this an effort to wield some influence in this territory, in this country, which they deem a territory of China, and trying to mess with that a little bit?
Considering, Alex, that there's some geopolitics, a geopolitical element to this, does this reignite those worries for foreign companies? Does it reignite worries for Apple specifically?
Yeah, so absolutely on both counts, right? We've seen a slowing of foreign direct investment in China. A lot of it to do with the way that they have targeted their own tech companies in recent years and tried to rein in their power. We think about Alibaba in particular. But when you look at Apple, they have enjoyed something of a symbiotic relationship with China over the years. They employ indirectly millions of people there to manufacture their devices, but it's also 20% of Apple's total sales in China. That is a percentage that we've seen increase over the years. It has been growing more quickly than some of those other markets. It's now facing slightly stronger headwinds, stronger competition from Huawei than they've had in the past few years. We saw a new device which is supposed to be challenging the iPhone 15 and that lineup. The question is whether it can make enough of them to be able to compete with Apple, or whether it's really symbolic. There have, of course, been constraints on China's own technological capabilities from the US. There's suspicion that some of this pushback from China is in reaction to the US efforts.
Okay, Alex, thank you very much for that. That is Bloomberg's Alex Webb. All right, some breaking lines to give you some deal news. Chevron has agreed to buy Hess. It's for an $171 per share all-stock deal. That puts the valuation of this deal, the size of this deal, at $43 billion. The total EV of Hess then becomes $60 billion, including debt. It's a 5% premium to the close. And you just mentioned, this is the second major deal in this oil industry in just a few weeks. Exxon had bought Pioneer for $58 billion, Manus, not that long ago.
Yeah, who said the investment bankers weren't going to, pull the ka-ching before the end of the year? But that is a pretty monster deal. Bonds above 5%. We'll discuss that with our next guest in just a moment. Ring the bell. 2007 was a hell of a year, but it got bumpy. Good morning from New York.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Happy Monday. This is Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Manus, you said ring the bell. I'm going to say release the balloons because we have hit a milestone, 5% on your 10-year Treasury yield. That's the first time that has happened since 2007.
Well, we're either on our
Joining
way
us
to
now
heaven or
discuss-
hell.
Yes, very well put, Manus. What an interesting Monday we're having, and joining us to discuss is Sandra Horsfield, economist at Investec. Sandra, here we are, 5% on 5% on the 10-year yields, first time since 2007. Is this now finally the screaming buy that we've been waiting for in duration?
It's very difficult to be confident at this point exactly where you might like to call the top on yields. When is it time to buy? Certainly, if we're looking at things like inflation trends, they have been pointing down. The economy, however, has been holding up very much, and there's the supply picture to take into account as well. How do you balance this? I think markets are treading very carefully, and there's a lot of nervousness still around.
That nervousness, Sandra, good morning to you. What we're trying to understand is whether curve steepeners, and Danny started the show with this. She showed 230s, almost in positive territory. What goes through my mind, and the questions I was asking to people yesterday on a treadmill, which was, do duration hunters come in here? Can you stand in front of the velocity of this steepener? Do the steepeners just continue, and does that cause you, as a bond duration buyer, to hold your powder dry? Because these steepeners look as if they're set to run further.
I think what we had is quite different trends here. For a while, it was all about the short end of the curve. We had the expectation that interest rates would have to stay higher for longer, and that drove the short end higher. Now it's sort of more the long end of the curve too, where expectations have moved up. And it's a lot less clear, perhaps, exactly where that one might stop. Perhaps there's more of a natural anchor, if you think on the short end of the curve, than on the long end of the curve. Certainly in the cyclical perspective, we have to take that into account. And the supply picture isn't very pretty. So I think that is where the overall nervousness comes from, and that is why it is so difficult to really call the top here for yields at the very long end of the curve.
And what's made this steepening so unusual, that we are seeing this bear steepening led by the long end, does that mean that the historical evidence that this is when we enter recession, when the curve finally normalizes, that it doesn't apply in the same vein, just because the shape of the curve is looking different than historically how this plays out?
We've gone through a very strange period in a way, because we have had this inverted yield curve for such a long period of time, and we didn't get the recession that normally you might have seen in this sort of circumstance. So what is going on here going forward is really a question of how the economy reacts. And higher long-term yields by themselves tighten financial conditions. So companies will face higher borrowing costs for the long end, not just short-term rolling over of debt. And that could slow the economy in its own right. And that will be a factor that certainly the Fed and others will have to take into account.
Sandra, one other thought we want to get from you. Obviously, dollar-yen breaking through 150. Everybody's on intervention watch. Let's wait and see. But the bigger issue is this, of course, Japan holds over $1 trillion worth of U.S. treasuries. The Nikkei is floating the idea that YCC may be tweaked or changed earlier than we all think. That's the latest from them this morning. If and when that Damascene moment comes from Japan, what is the repercussion of repatriation? Will it be slow and let's say paceful, or will it be much more brutal?
It's a very good question. Certainly one we haven't had to actually face. It's been theoretically discussed for some time. I think what we are going to see is certainly more flows and more pressures from that side as well. We have to remember the Japanese authorities will want to tread carefully as well. For them domestically to destabilize the bond market is a problem as well. There's a lot of Japanese domestic debt out there, and certainly would cause big problems if there were to be a too large and too quick a rise in yields domestically as well. So I think that will all be factored into the equation, and since a relatively cautious move is more likely.
Okay, Sandra, thank you so much for joining us this morning. As 10-year government bond yields break through 5% for the first time since 2007. What are the repercussions across global bond markets? We have this disinversion going on in the U.S. curve. Yields are rising across. We have the ECB this week. Consensus is for no further hikes. 10-year government bond yields rise, but it is supply that is perhaps the most anxious issue in 10-year government bond markets this morning, right here on Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Brief. I'm Manus Cranley in New York with Danny Berger at London HQ. The reason why I'm slightly chuckling, apparently there was a dog parade for Halloween. The things that I learned about New York culture and zeitgeist. I wonder why there were so many puppy powers out and about, but apparently that's it. But we've got much bigger breaking news in terms of the bond market. Never mind the dogs.
We do. I'm just trying to think if Manus Cranley had a dog, he'd somehow figure out how to dress it in a disinverted yield curve. I know he would. But here is where we are on the 10-year yield. Manus, this is a big move. 9 basis points. We've done it. It's happened. We have crossed 5% on your 10-year yield.
Well, we've done 40 basis points in the space of a month. So the question is this. How much pain from the bond market can the equity market take in a week? And we'll recap this. There's some big numbers coming out this week in terms of the equity market, but this spike above 5% is going to be deleterious. There's my new word for the week. Deleterious to the growth stock narrative. But of course, it's how much more term premium do the bond markets and bond hunters want to own treasuries? That is the debate. How much further beyond zero will it go? Danny, good morning. You get everything. Dogs and deleterious.
I hope the kids are watching this program for their SAT prep, because you're certainly helping out a lot for the vocab section.
Okay, we're going to return to our top story in just a moment. Geopolitics around the world, focused on Israel.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Welcome back to Bloomberg Brief. I'm Manus Granny in New York.
And I'm Danny Berger in London. Here's what you need to know. Leaders of the U.S., Canada, France, Germany, Italy, and the U.K. hold a Sunday call to strategize on preventing the Israel-Hamas war from spreading to the wider Middle East. That's as diplomatic efforts continue to secure the release of more hostages. Oil and gold reverse their rally as treasuries fall, all ahead of a big week of tech earnings with nearly $16 trillion worth of earnings on deck. And China cracks down on foreign firms with a series of arrests across industries and a probe into Apple supplier Foxconn. Manus, I'm going to get through my first two assets really quick because there's only one thing we care about, and it is bonds. Crude, that falls, reversing the gain from Friday. Dollar yen briefly tested 150, and here's exactly what I wanted to get to. We are back above 5%, Manus, on your U.S. 10-year yield. This is the first time since 2007. It also means that this curve steepening, this disinversion, this normalization gets kicked into hyperdrive. The other concern with this, man, is not just what it means for your portfolio, but what it means from the Fed. They've been pretty sanguine. We heard from Jay Powell. He was pretty sanguine about the idea of higher yields, meaning they can do less work. But at what point do we look at this and say the Fed has lost control? They've lost the grip of the long end, and with mortgage rates above 8%, it could unduly tighten this American economy.
Well, the question is, have they lost the grip on the language and the guidance? The market just simply does not believe that it can absorb the supply. We haven't got a clearing price. FCON is tightening, and the bond market is doing the dirty work for the Fed. That is the narrative, isn't it? Let's just check in on equities, because the bond market may be spiking higher. The equity market is choking. It's got $16 trillion worth of equity report cards to deal with this week, from Microsoft through to Apple and Amazon. We're down 0.5%. Morgan Stanley, Mr. Wilson there says, again, the market, in terms of the profit views, they're just too high. So right now there is pressure on these equity markets. There was, all of October's gains were gone. We're down 1% on Friday. We're down 1.5% now in the space of two trading sessions. The Chinese are back at the sort of turning the screws down. They've made arrests in a Foxconn probe. And of course, that has shaken confidence. That's the close in China. But again, it's a deep-seated concern about another round of arrests and intervention in China. Europe is floundering, down 0.7%, despite the deal-making news from Roche and Philips. Philips came out with a guidance on where they would get to, which was a little bit better, but their order book is under pressure. Roche is down 1/3%. Philips at the moment is down nearly 2% on the back of the order book. So right now what you've got is a fairly tough position to grapple with this move higher in global bond rates, Danny, and therein lies the vexation for these markets.
And it's important to note that this is being led by a sell-off on the long end. Manus, you and I have been talking about this, about the rapidity of the disinversion of the curve. I'm looking at 230s right now. We are just below 4.5%. We are easily positive, Manus. Should that happen, should it close there, it would be the first time since August 2022.
Well, the question is there enough term premium to induce the duration hunters to come into the market and pick up? We can debate that through the rest of the morning. To our top story, Danny, which is, of course, the Israel-Hamas war. We're joined now by our opinion columnist, Bobby Ghosh. Bobby, good to have you with us. This morning, when we were going home on Friday, the consensus was around a significant ground invasion. That seems to have been held back. 2 hostages have been released. Where are we now? We've had Biden on calls with the Western allies. We've had a gathering of the Arab nations in Egypt. This ground assault, this invasion seems to have changed in perspective, timing, and construct. Your take. Good morning.
Good morning. And Manus, there's a lot of pressure on the Israelis to hold off, to restrain themselves from the United States primarily, but from the wider world, I would say, cautioning against the ground invasion for all kinds of reasons. First and foremost, for humanitarian reasons. All these images that we're seeing now, the destruction wrought on Gaza is basically, has shocked the world. Even by the standards of the region, this is extraordinarily massive destruction. Then there's the matter of the hostages, as you mentioned. There are more than 200 of them, and from many countries around the world, most of them Israelis, but plenty of others, including some Americans, which is why President Biden has himself been putting pressure on the Israelis to restrain themselves in the knowledge that if they go in on the ground offensive, quite aside from hundreds of thousands of Palestinians, also those hostages will be in harm's way. And then, of course, there's the question of strategy and tactics for battle. The big difference between Israel's previous ground invasions and this one, again, those hostages. Israel needs to know where they are, needs to figure out how best to avoid hitting places where they might be. This greatly complicates any planning for the operation. The ground invasion will come. Eventually it will come because the pressure on Netanyahu from his own people is really quite great, and his own instincts are to go in with the ground invasion, but he is being restrained by all sorts of different pressures.
And Bobby, what happens? What is the risk of, and what changes in the contours of this conflict should a new northern front open? Should escalation with Hezbollah and Lebanon turn into something greater than it is at this point?
Well, that has been the concern from day one. What happens if Hezbollah enters the fight? So far, Hezbollah has satisfied itself by lobbying the occasional rocket, the occasional missile in the direction of Israel and keeping Israel on its toes and not going any farther than that. But the decision about whether Hezbollah joins the fight will not necessarily be made in Lebanon. More than likely, it will be made in Tehran. Iran is the main backer, not just of Hamas, but also of Hezbollah. Iran has a major role to play here. Iran wants to keep Israel off balance. Iran wants to hurt Israel. Right now, it is achieving that result just through the operation in Gaza. It has dragged Israel into this operation. It is basically Israel's image in the world is being affected by these video and these images coming out of Gaza. That all suits Iran perfectly well. At some point, Iran will have to make the calculation about whether or not it is worth its while to throw its other forces into the fight. Rationally, you'd think they wouldn't. They don't need to. But Iran doesn't always act rationally, and that's what keeps everybody guessing.
We had a peace gathering in Cairo. It was very well televised. A very impassioned speech by King Abdullah.
Yeah.
Talking about the value of life. And depending on the context of where you sit, there is the view, in his words, about the virtual silence of the West. There was one message for the Ukraine war and another message for this situation. But you say the gathering was virtually pointless. Why?
Well, it was important symbolically, and King Abdullah's speech underscored that. Important to remind the whole world.
I thought it was a great context.
It was, indeed. And it is important to remind the world that vast numbers, really large numbers, 2 million plus innocent people, civilians in Gaza, are caught in the middle of this. So that was very important. But in the context of trying to move the needle on the conflict itself, I don't think it achieved anything. First and foremost, the four most important protagonists whose contributions will matter the most in ending the war were not there. There was no Israel, no representative of Hamas, no United States, and no Iran. Without these four at the table, metaphorically speaking, there's not going to be any progress. The second thing was that the conference didn't end with any kind of a peace plan. It sort of was a rousing and emotional moment.
It was a very emotional event, wasn't it?
Correct.
Yep.
And there was a lot of expressions of sympathy and the importance of humanitarian effort. But there was no actual roadmap to say, here's what needs to happen, here's what we want to see the two sides to do, beyond just say, well, there should be a ceasefire.
Bobby, what about further plans with Egypt and Israel when it comes to aid? We know the importance that crossing plays for that. We've seen the first amount of aid due to cross in to Gaza. Is there hopes that there will be more and that it will, again, make some sort of ground to aid those 2 million innocent civilians in a time of need right now?
Well, there has to be more. The aid that has been allowed to go through Rafah is a trickle. I mean, a couple of dozen trucks at a time. In normal times, more than 100 trucks go in just to keep Gaza going. In a normal time, not in the middle of a war when the need for food, shelter, medicines is so great, fuel is so great. There has to be more, and that's the other part of the pressure from the international community on Israel saying you've got to allow much more supplies to go through. There are complications. It is, after all, a war zone. Some of the roads inside Gaza have been badly damaged by bombing. And then there's Hamas. We don't know whether it suits Hamas's purpose to allow these supplies in. Hamas benefits from its own people being seen as victims. Hamas victimizes these people in its own self, in its own sort of perverse calculations. It may not suit Hamas's purpose to allow more supplies in, but they're essential, they're crucial. There are, as you say, 2 million people there who desperately need them.
Bobby, thank you very much for joining us this morning. That is Bobby Ghosh of Bloomberg Opinion. Now let's get some other top stories that are trending on the terminal this morning. And Republicans have unveiled 9 candidates in an effort to end the House Speaker deadlock. The GOP will return to Washington on Monday for a Speaker's candidate forum at 6:30 p.m. and is set to start the election process on Tuesday, Manus.
Argentina heads to a presidential runoff election vote as the economy minister defied expectations against libertarian outsider Javier Milei. Massa secured 37% of the votes against Milei's 30%. The decisive vote for the president comes next month on November the 19th.
And in deal news, Roche will buy drug maker Televant for $7.1 billion. Roche will add the developer of inflammatory bowel disease treatments to its roster of experimental medicines. The deal marks the company's largest acquisition since 2014. Manus, a few quick markets to look at. Worth checking the Israeli market because we're now looking at the shekel set for its longest run of losing streaks since 1984. There will be a Bank of Israel meeting today. They're expected to hold rates steady.
Yeah, they're going to give us the first, I suppose, data implications on the accounting for the toll on the economy from the conflict of the Israel-Hamas war. And of course, what will they do? Almost all economists predict a pause in place since July. So we're looking at 4.75% for 2 straight meetings. I mean, that is after 10 straight hikes that we've had. And of course, we spoke to the former central bank governor, and she was saying, look, there's enough arsenal in the central bank to defend. The reserves are robust. They are there, and we know that they will use up to what is it, 30 billion. That is the number that they put out there. But of course, bonds is where the key story for the world is this morning. Danny.
Yeah, we had that crossover from above 5% for your 10-year yield. That's the first time that's happened since 2007. It's now moved 10 basis points, Manus. We got an extra basis point while we've been talking over the past 10 minutes. This is some real velocity we've seen in this move. They gained on Friday, and as you started the show saying, a carbon copy, a complete redo of last Monday when the gains on Friday turn into losses come Monday.
Indeed, we've got the ECB this week, so all eyes down to see what the narrative is from Christine Lagarde and her cohort. Yields rise around the world. Good morning from New York and London on Bloomberg Brief.
will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, for the second time in just a week, we've seen the yen test and breach 150. We are just below that level at this moment. There is a big options barrier there, so it's not unusual to see that continue to be back down. Last time this happened, the world was a flood of speculation risk that, according to Bloomberg's own internal calculation, did seem unlikely at the time. Is that risk reappearing now? Joining us is Bloomberg's Ven Ram. Ven, we've had this test yet again of 150 as we head into a week of a BOJ decision next week. Dollar yen 150. I mean, is this something that's going to get the MOF concerned, or is it more about the volatility and the pace of losses?
I think the MOF is concerned by the level per se of the yen. For a long time, they've known their displeasure. They've made known their displeasure about a yen level at 150. That seems to be the line in the sand for them. But having said that, the BOJ isn't on the same page with the Ministry of Finance, because the BOJ, from the BOJ's perspective, a weaker yen means more steadfast inflation, of course, and they would want that. So the BOJ is not sweating bullets about the weaker yen. What that means is that we could easily get to 153, which was the previous record low that we have seen in this cycle. Now, I mean, Treasury yields, you're just saying that it's gone past 5%, and if that continues and real and nominal rates continue to diverge in favor of the dollar, the yen is going to cop it. And so it's not just about the volatility, it's also about the level for the MOF very much.
I love the way you put it, it's the yen that's going to cop it. I mean, the other thing, we've done the MLive survey in terms of yield curve control. The Nikkei floats the issue again in the papers over the past 24 hours. We put it to a guest earlier that maybe one of the biggest tail risks, there you go, there's the MLive survey, which asset class will suffer the most from rising JGB yields, and it is, of course, ultimately U.S. Treasuries. That is, Japan owns over $1 trillion worth of treasuries. The Chinese are selling them. You've got fiscal disarray, you've got political disarray, you've got supply plentiful. And then if the Japanese pull the ripcord on YCC, that could drain another natural buyer of treasuries. Or am I just too close to Armageddon?
Well, I do think that makes for a great storyline, but I don't think it's going to quite work out that way, Manus, because I don't think that the Bank of Japan is going to, even assuming that they're going to tweak yield curve control, even if we assume that they're going to do away with negative rates, you know, we are just going to get fractionally positive rates, if at all, in Japan. And that doesn't mean they're going to have 5% yield on treasuries and come back to 0%. It makes it that much more alluring, for sure, but you know, that's not to say that the gap is going to be bridged anytime soon. And therefore, I don't think, I mean, where I think it'll have a real impact is on the FX side of the equation. And there, I think that the dollar is overbought, it's over-resilient, and the yen is extremely cheap. On a real effective exchange rate basis, it's extremely cheap. and I think it has a course to correction. So I think that the bigger moves you will see are in the FX, not on the rate side.
Well, what does that mean then for this narrative that there are no buyers for bonds right now? Supply is ramping up considering the fiscal issuance that we've seen. China isn't buying. They fled U.S. assets to a record in August. And then the other part of that story has also been Japanese investors are at some point going to cease to buy treasuries. Is what you're telling me that narrative is not as clean as maybe we assumed?
Well, I do think that, if you look at, where is the marginal buyer of treasury going to come from? It's going to come from portfolio managers who think that we are done on the rate hiking cycle, and we are not at that point yet. I mean, the U.S. economy is wagging its tail, and it's wagging a mighty strong tail at this point because, the U.S. economy is pretty resilient. The labor market is tight. I mean, the Fed has tightened rates phenomenally in this cycle, but the economy has taken it pretty much in its stride, as Jerome Powell said last week. As long as that continues to be the case, the marginal case for buying the dollar, the marginal buyer of the treasuries is going to be a bit more hesitant. And they've been bitten before. We have seen yields come back from 3.30 on the 10-year to 5% now. Mm-hmm. And all those who bought it then have suffered losses, immense losses. And there is no conviction in the market right now that we are done. So that is going to keep the market on the defensive.
Well, stocks are down for the 5th day in a row in the US, the longest losing streak since December 2022. I found a fact. Very quickly, Treasuries above 5%. Are we on our way to heaven or hell?
I think we are on a short-term way to hell, which then leads on to heaven. So that's the path I see.
I don't think either of them are. I don't think any of this is heaven at all. I don't know why I'm chuckling. It's just a nervous laugh, really.
I also don't think a short-term stop to hell really is a good thing. Whether or not you end up in heaven afterwards, that doesn't sound great. I think we're going to have to leave it there, unfortunately. That is Bloomberg's Ben Ram. All right, Manus, let's take a quick check on currencies. As we were just talking about that yen nudging up to 150. Ven says it could easily go to 153 with the BOJ not caring too much about that drift lower in the yen. Sterling takes a beating, down 0.1% as King Dollar remains supreme. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day as S&P 500 futures dip as those higher yields above 5% really challenge us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying. We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London. Manis has gone to go set up with the surveillance team, so you'll see him just a few minutes' time. All right, let's get you set up for your trading week with a look at what's ahead. And it's an earnings bonanza. Tech giants Microsoft and Alphabet, they'll both report on Tuesday after the bell. And then we'll get IBM and Meta. Those earnings hit on Wednesday, also after the bell, with U.S. new home sales on the same day. And Amazon and IBM, they report on Thursday. Also on Thursday, we have that ECB rate decision and numbers for U.S. GDP. So it is a big week, but already a big day when it comes to some of these stocks, because we have some deal news. I should say the second big oil deal to happen in less than 2 weeks. Chevron and Hess, they will be, that's what's under focus right now. Chevron is buying Hess for $53 billion. That is an EV of $60 billion, $171 per share for an all-stock transaction. Then we're also looking at Apple pre-market under pressure, down more than 1.4%. Han Hai, those shares dove in the China session after probe started. Reportedly, arrests were also made. But I should say, it is not just Apple. It is not just China. Japan is investigating Google over alleged antitrust violations. So we're seeing Alphabet shares down nearly 1%. There are also some European movers to keep your eye on, some earnings. We had Volkswagen. This was a prelim report. Those figures came late Friday. Third quarter EBIT below estimates. Higher production weighing on company costs. And Philips, also comparable orders falling in the third quarter. Now, we're also looking at a 10-year yield breaking above 5% in a move of 10 basis points. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is a time for humility in multi-asset investing.
We're likely to see the lagged effects of policy tightening and a growth slowdown.
We're definitely having a reset to a higher actual return environment.
This economy has a huge mosaic of factors that are inputs to what's happening in the overall market.
That's what we're seeing now. Challenge in the bond market, success in the equity market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on a Monday, an historic Monday for the bond market. We will get to that in a moment. Joining us today, John Farrow on an island south. I'm really not quite sure where he is. Taking the short straw, working from the early morning hours, a gentleman from Ireland, Manus Cranny, will be with us today. This is a good and beautiful thing. Welcome to the show.
Tom, good morning. Lisa, good morning. Yeah, well, at least I'm doing better than the English are after the World Cup rugby.
The World Cup, we'll talk about that. Australia with the late moments here. Right now, we're going to talk about something Bramo's focused on. You see it on television. You can hear it on radio, 5.01% on the 10-year yield. Lisa, history made this morning.
First time since 2007 that you've seen the 10-year yield cross that 5% threshold, and it comes at a time of risk-off feelings right now in the market. This is important. Usually risk-off, people go into treasuries. It is the haven bid. No longer is it the haven bid, at least for the past couple of weeks. That's significant in a time where people really don't understand why yields keep climbing.
Well, this is without question the conversation of the week, and I would have to say that we've got a lot of good thoughts on that. Mohammed El-Arian publishing, Ruchir Sharma of the Rockefeller International with a sharp note in the Financial Times as well. El-Arian looking at this instability, and Manus, the instability here, it is global.
It is global. You're seeing bond yields rise, gilts rise. So there is this overall momentum. And the conversations that I'm having are, we're sitting here going, why are asset managers and why are insurers not stepping in here in more size on these rich yields? They simply do not have what's referred to as the convexity. They're not forced into buying here. They're already long and wrong.
Right.
And so the appetite is simply not there.
Right.
What you've got this morning is, in part, some of the hedges that were put on Friday on the Hezbollah-Israel war.
Lisa, should we ask him some banking questions so he feels welcome here?
Is that gonna
Manus
feel
Cranny
welcome?
holding court at Brasserie Lipp in Zurich. We're going to go right there right now. Let's take your experience with UBS. How scared would you suggest, Manus, the big banks are right now with this price down, yield up unraveling?
This is what's going to push major banks to review their VAR. They're going to review their risk parity.
They're going to pull in.
They are. I mean, FCON is tightening, and so you're going to have major review of risk books this morning because we're shifting into a different paradigm now.
All right, we'll go to Lisa here on one more question, then we've got a little bit of geopolitics to discuss as well. How does a 5% yield redound through credit? How does it redound this morning?
He's throwing them out this morning, isn't he?
It's a good question, and it hasn't been that traumatic, at least so far. And I think that has been the big takeaway. And Jim Reed over at Deutsche Bank this morning writing, he doesn't buy it, right? And there are many people who say, how can this be that over 20 years we talked about the existential risk of everything getting blown up if yields ever rose? Yields rise, and so no one cares, right? And all of a sudden these things are managing just fine. At what point does that change?
We're going to advance the discussion here on what we see in the Eastern Mediterranean. Lisa, just a horrific weekend of waiting on war and considering a humanitarian crisis.
If you take a look at oil, The headline is, people are a little bit on the margins less concerned about some sort of regional protracted event. If you listen to all the Sunday talk shows, anything but, you heard Tony Blinken coming out and saying, we're worried about our troops in the region, we're building up all of this stuff. I mean, it didn't sound like we were getting closer to resolution, but it does seem like they're holding off on a ground invasion, at least for now, possibly for hostage release negotiations.
Anne-Marie Horton with us as well, our Oliver Crook in Tel Aviv. There is a merger this morning at $60 billion all in with debt, total enterprise value is what we call that. And it's real simple here. Chevron, and for those of you worldwide, this is the reality. We're doing this for Alarian. Chevron buys New York Jets Petroleum. I mean, that's really what's going on here. This is a heritage stock for those of us in the Northeast that grew up with Amarada Hess. We won't take time on it right now, but this is a huge transaction, a Chevron to buy Hess. It's the same green colors of New York Jets because
is that what you're doing?
Mr. Hess Sr. owned the Joe Namath New York Jets.
I really wasn't really connecting.
There's only like 12 people watching or listening and know it, but this is the New York Jets Petroleum Company.
I just thought
I thought he was going down the Irish sort of like green jersey road, but no, it's
part of that as well.
It's part of that as well. Nothing to do with the 11 million barrels of oil that they got in their hands.
No, it had nothing to do with Guyana. It's about New York Jets Petroleum. We said good morning to Dr. Alarian. I'm going to look at what it's not out yet, Lisa, but the beginning of my data check is what I don't know yet, which is the 10-year real yield. Where will that set this morning?
Especially given the fact that we're looking at the highest real yields that we've seen going back also to 2009. Do we start to see that continue as you see the absolute nominal yields continue to rise? What I'm looking at is also the risk-off feel in the market, even as we get earnings from 30% of the S&P so far this week. We're going to get earnings from Microsoft and Alphabet tomorrow, Meta on Wednesday, Amazon on Thursday. This has been the boondoggle behind the gains this year. I mean, you see the gains from Microsoft up 36% year to date. Yeah, Google or Alphabet, 54%. Meta up 156%. Amazon, 49%.
I had no idea.
How high is the bar for these, behemoths, these fortresses?
But can they run? Can they continue to run if you get to 5? I mean, what's coming through on my IB at the moment from a couple of different brokers is this is going to punch out to 5.25, 5.5. That's where it kicks into American economy. But more importantly, that's what kicks into the growth stock. That has got to at some stage. At some stage, it's got to affect damage to growth.
He's worse than Faro. I mean, Faro's doing 8,000 shares at IPOs. Manis is on the phone to his broker.
Well, on the cross trainer on a Sunday, Tom. Is that not?
It's there. Continue with the brief, Lisa. Say this.
We also get talking about higher rates and when that starts to affect growth. We do get bank decisions, central bank decisions. Bank of Canada on Wednesday, the ECB on Thursday. Basically, the expectation is for nothing, and basically no additional rate hikes, but that'll be interesting because they've got a more difficult situation.
Lagarde in Marrakesh was heated that they will maintain a 2% goal. She was focused and heated on message.
I'm glad that you say that, because can you have GDP where we have it now and get to 2% without some more restrictiveness by central banks? We get that third quarter GDP print from the U.S. on Thursday, including personal consumption, core PCE, and then on Friday, U.S. September personal spending, personal income PCE deflator. If you take a look at the Atlanta Fed GDP now, you're talking about a 5.4% expansion rate in the United States. How does that pair with 2% inflation?
Friday, Lisa and I were wasting away in Margaritaville. It was such a stressful week, and I think we pick it up right here on Monday. We welcome all of you, and again, Anne-Marie Horton and Oliver Crook will join us in the 7 o'clock hour. Joining us now on the markets, your reset within this trauma, Larry Adam joins. He's Chief Investment Officer at Raymond James. Larry, as you write this morning, trying to figure out what your year-end note will be, in a bath of uncertainty, what is your level of conviction?
I mean, we have a lot of conviction of what's happening in the markets, in the sense that a lot of these numbers that you're going to see come out this week, like GDP, I think it's important to recognize that that's old data. That GDP report that comes out is going to be talking about the spending that we were all doing at the 4th of July, right? That's a long time ago. But I think if you look at what's happening now, real time, this economy is starting to slow. And I think by the time we get into the first quarter of next year, I think we do have a mild recession unfolding, which will ultimately help take those yields that we've been talking about this morning lower.
Yeah, I know that, Larry, you talked about a 3.5% target for a 10-year yield, which is sort of shocking at a time when we're seeing it climb above 5%. Tom just asked, what's your conviction level? Do you have more conviction or less conviction as you see how much yields are rising?
I would actually say more conviction because, as you guys mentioned earlier, I think these higher interest rates are starting to bite on this economy. Mortgage rates at 8%, credit cards at 21%, small business 10%. You know, that lagged effect is going to take effect pretty soon here. Why hasn't it happened so far? Is because we have all that cash in, you know, savings accounts. Companies were flush with cash, but a lot of that's now been evaporated. And I think that this is really going to start to slow this economy down pretty quickly.
What impact does this break above? Good morning, it's Manus here, Larry. Good to speak to you. What impact does this have on credit? Do you think that you're going to see credit spreads blow a little bit higher on this move above 5% on the 10s?
I do think that the credit's not necessarily pricing in the risk that we see going forward. But as we said, as interest rates go lower, like the Treasury goes lower, I think you'll start to see those spreads start to widen out. So particularly in high yield, I don't think that they're really pricing in the expectation of any type of recession unfolding. That's where I'm more cautious in this market.
Larry, what are people doing? Raymond James has such a reach of invested retirement money. I'm assuming, through no fault of Larry Adams, people in bonds are going to look at October statements with blood on the street. What is retail doing?
No, that's a great question because I think one of the reasons why I think rates can come down in the lower end is because when we talk to retail investors, nobody's really wanted to go out longer on the curve. I mean, why would you when cash rates were at 5% and the longer yield was at 4%? But now that you start to see those yields start to be pretty much similar at 5% this morning, I think you're going to start to see that appetite increase. And we've been talking about being more balanced recently, but as we move towards the Fed being done their tightening cycle, that's when you want to start to extend further out. So I think we're in that window where you can start to transition and take a little bit more duration with your bond portfolios.
Larry, you were talking about how we're seeing data that shows strength, but it's backward looking. And this is something Mohamed El-Erian was talking about earlier this morning. If you take a look at the earnings that we're getting, that's kind of a mixed picture, and it kind of confirms some of the strength on an ongoing basis. How much are you willing to change your view on increasing caution and chance of recession if the earnings that we get this week, a significant chunk of the S&P, shows that strength in big force?
Well, I think you're right. This is an incredibly important week from an earnings perspective where we get over 40% of the market cap. But I think that there's really something important, that the economy isn't necessarily the equity market, right? A lot of the companies that are coming out have been a little bit more immune, particularly in the technology space when it comes to their earnings growth. But when you look at the underlying economy, when it comes to retail, when it comes to some of the banking part of the economy, I think that that's where you're going to probably see a little bit more weakness going forward. But this is a big week, because historically, this is the week, the third week of earnings season tends to be where you start to see those earnings expectations start to move higher. If that does not happen this week, I think we're going to be challenged to get that year-end rally going forward.
Morgan Stanley warned that perhaps the estimates for profits are a little bit too high going into this earnings season. What's the narrative that's going to be most important for you as you look at these big tech earnings and the others that come down the pike this week? What is the most important narrative? Is it about the guidance for 2024 or something more specific?
No, it's absolutely about the guidance. I mean, I agree that earnings are inflated for next year. You know, we're looking at earnings for the most part to tread water going into next year. I mean, consensus is around 246 in earnings. We're going to be somewhere between that 220, 230 next year. So I think there is a significant amount of digesting of the eventual weakness in this economy that's going to have to be factored into those earnings. So clearly, guidance will be the most important.
Larry Adams, thank you so much. It's Raymond James. And of course, we wrap it around in November. November 2nd will be important. Apple earnings as well. I want to dive into the data check right now. The news flow is so extraordinary. We gave it a second shift. Pharaoh emails in from, I don't know what island he's on. He emails in. He says, Tom, I'm in the pool with an umbrella and my cocktail. Would you please help me with the data? Lisa, let's go there right now. 2-10 spread. Disinversion in place, going from pre-Misra negative 100 basis points. We're slamming up to negative 11 basis points. While Manus is with us this week, we could see 2s and 10s the same.
Right, we could see a disinversion in a dramatic way. And this is bad, right? Everyone was talking about how an inverted yield curve was really bad and that indicated recession. But it's now people saying, well, when it disinverts, that's when the real trouble starts. And here we are. I mean, that's basically what you're seeing going on.
$1 for 150 for a cup of coffee here. What do they drink in Ireland? Do they have
$1.50 for a cup of coffee? Are you joking me?
150 yen is what we see here right now. 149.98. And to both of you here, you know, it's expect the unexpected. But I'm like, how does Japan respond to a 5% 10-year yield. Manis?
Well, the biggest risk for Japan is that they've got to tweak YCC. It's floated out in the Nikkei overnight over the past 24 hours. If they yank YCC or tweak the rates, Tom, you've got $1 trillion worth of treasuries that they own. What happens to the flow of treasuries if they tweak?
Exactly, the knock-on effect. Brent crude under $92, not affected by what we see in the Eastern Mediterranean.
Well, I think people are breathing a sigh of relief that there hasn't been a ground invasion yet, but it's sort of...
It's a little too soon, though, isn't it?
Oh, well, yes, exactly. When I was reading some of the headlines over the weekend.
Tell Manis this isn't the damn BBC. We have to go to commercial break.
Commercial. You're going to be heckled for your providence.
In the 7 o'clock hour, Wei Li will join from BlackRock. Good Monday morning.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. Today, Bloomberg's Guy Johnson and Alex Steele sit down for an exclusive interview with Virgin Atlantic CEO Shai Weiss and Delta CEO Ed Bastian. The health of airline companies, the future of business travel, and headwinds facing the industry. Tune in today at 11:30 a.m. Eastern, 4:30 p.m. London time on Bloomberg Television. Context changes everything.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to. This is not what we want, not what we're looking for. We don't want escalation.
The Secretary of State Blinken there on NBC over the weekend, managing the message forward. Thank you for joining us this morning. Manis Cranny in for John Farrell, Lisa Bramowitz, and Tom Keene. Julie Norman will join us here in a moment. She is absolutely definitive. All of her academic work on considering terrorism and the geography of the Eastern Mediterranean. Dr. Norman will be with us in moments. First, though, an update from Tel Aviv. Oliver Crook, just simply for those off the watch in America, what happened over the weekend?
Yeah, Tom, it's been a significant weekend this weekend, a number of developments and a lot of firsts and precedents. So for one is the release of hostages, 2 hostages, we understand brokered by the Qataris, 2 American citizens released by Hamas. They said on humanitarian grounds, no one really knows what that means or why they chose these 2 hostages. There's some speculation on that. But then the second is about aid, is the first trucks we saw roll into Gaza from Egypt, 20 trucks on Saturday, 14 on Sunday. But again, a fraction of what is needed according to every sort of aid organization. The UN says it needs to get closer to 100 trucks a day in order to make a meaningful difference. In terms of the military update, Tom, you have continued hammering of Gaza. That is the main theater of war that is still going on. But we're seeing more and more on the northern border in Lebanon. And this is going to be an increasing concern, particularly when you think about the notions of escalation. But also, we should mention there have been some pinpoint incursions by the Israelis into Gaza. So we take this all in full on this Monday morning.
Do we have a sense, Oliver, of why the ground invasion hasn't happened yet?
So we do have some sense of that. Again, I think it's difficult to say precisely, but there definitely seems to be some of the influence that is coming to bear from some of the allies of Israel, from the United States. Particularly, there is this concern of hostages. I mean, when you think about the equation here for the Israelis, right, the outcome is clear. They want to fully dismantle Hamas, but there are all these inputs into it, whether it's the hostages, but it's also about the sort of moral imperative of reducing civilian casualties, but with that, a very practical consideration, which is getting the enduring political support of the rest of the world. We had this Arab summit as well over the weekend. I just want to read you a short quotation from the King of Jordan, who said, the message to the Arab world that is hearing is loud and clear from the West is that Palestinian lives matter less than Israeli ones. And he says that is a very dangerous message to be putting out there.
Oliver Crook, thank you so much. Of course, Jordan buttressed up against the West Bank. Oliver Crook in Tel Aviv this morning. This is an immense pleasure. Julie Norman, yes, the co-director of the UCL Center on U.S. Politics. She's author of The Palestinian Prisoners Movement, Resistance and Disobedience, but basically is the definitive expert on the shades of Palestine over the last 20 and indeed the years back to 1948. Professor Norman, thank you for joining us today. I want to go back 13 years to your Routledge effort on the second Palestine Intifada. The Palestine of now seems to be divided between the terrorists of Hamas and other shades of Palestine. Can you delineate those other shades this morning, or is it a mystery?
Well, Tom, I would say it's very important, I think, to differentiate Hamas and multiple other armed actors from the majority of the Palestinian people and also from other aspects of Palestinian politics. The Palestinian Authority is the main political body in the West Bank. I would point out, however, that the Palestinian Authority is very weak. They're the main partner for the West, for the U.S., for Israel. There are some who are hoping that the Palestinian Authority can maybe have some future leadership in Gaza after this war, but I think it will be very difficult. They have very little legitimacy. They've been very weak and racked by their own corruption. So a lot of questions about their viability, but I would say many other very strong civil society actors in Palestine.
If I link Israeli threats from Gaza up to West Bank and then north to Hezbollah, and I know you've written on Twitter about this over the weekend, is there a linkage of communication between the three geographies, or even is there a link of communication with them back to Iran?
Yeah, so I would say definitely communication between Gaza and the West Bank. Again, these are both Palestinian territories. Hamas has membership in both places, and both are pretty focused on the Palestinian cause. Hezbollah is a little bit different. They obviously coordinate to some degree with Hamas, but they are a separate entity. They're based in Lebanon, mostly in South Lebanon, and most of their operations have usually been in regards to Israeli operations in Lebanon or on that border. Both Hamas and Hezbollah receive backing from Iran, but the Iranian influence over Hezbollah is much stronger, and I would say Iran definitely will have a say on if Hezbollah activates, even more so than they already have, to really open up a northern front.
Julie, good morning. It's Manus. In Cairo over the weekend, there was a peace conference. Very strong words from King Abdullah, really chastening the West. But what I'm interested in, Israel, Hamas, the US, and Iran were not at that conference. Do you see that as a step one of progress for the Arab response, or was it pointless, as perhaps our Bobby Ghosh opinion columnist said this morning?
Yeah, so I would say we often see these kinds of summits just in regular times, and especially during wartime, different kinds of statements and rhetoric coming out. But in reality, I would echo what Oliver said just a few moments ago, and that is, a real concern from the U.S. and I think increasingly in Israel about the kind of the double bind of this operation. On the one hand, Israel obviously wants to deplete Hamas and have this operation that does that. But at the same time, you're trying to thread the needle of not having such widespread civilian casualties that you're actually increasing support for Hamas and increasing resistance to Israel across the Arab world. So there's both strategic and moral considerations there that I think Arab states are very well aware of, and the United States and Israel are also aware of.
Julie, throughout the weekend, I was reading all these reports, the U.S. saying we're beefing up security for our own troops in the Middle East. We're very concerned about increasing attacks on them. You have a lot of fiery rhetoric on all sides. It seemed like things were escalating, and then I look at the price of oil, and it's going down, and people are saying, actually, it's de-escalating. Which is it?
Yeah, I can comment on the political, and I would say obviously there's a very strong risk of escalation right now, and I think if that does actually happen in real terms, then you would see the influence on oil prices as well. Again, I follow the politics, and one of the very strong concerns of the U.S. right now, and one reason that I think they're hoping Israel will continue to be a little bit more cautious, is this real concern of escalation, not only to put deterrence measures in place, but also to make sure that U.S. presence in the region is ready and prepared for any possible actions from Iran's proxies in particular.
Professor Norman, thank you so much for joining us today on her work on Palestine over the decades with the University College of London. Manus Cranny, you mentioned one of my favorite people in the orbit of Bloomberg, and that is Mr. Ghosh. You had him on the 5 o'clock show. He gets up that early? Do you believe it? He's on Irish time. He's on Irish time.
He said he gets better.
What did the respected Bobby Ghosh say this morning?
Look, I think it's to that point over the weekend. It's very interesting how all the media that I've read and a lot of the presidents watching Blinken yesterday on Meet the Press, etc., there was very little coverage of actually that meeting in Cairo. And his point was, unless you have the US, unless you have Iran, which is, of course, what we're worried about the proxies, we're worried about escalations, then in many ways, not so much that it was pointless, but is you need more power behind that gathering before you see a significant shift. King Abdullah's speech, I would encourage everybody out there, if you want to understand other aspects of this, go and listen to King Abdullah's speech.
Abdullah of Jordan, with his American links, is extraordinary. Deerfield Academy and the rest. You've lived in Dubai. What is the relationship of the Persian Gulf, the UAE, Kuwait, and others to this conflict?
They wanted this to de-escalate. The UAE signed on to the Abraham's Accords. This is not something that they want to escalate. It's in their interest to get this off the board.
Manus Cranny with years of reporting from Dubai. We will continue with our coverage of Israel again and Hamas. Emery Horton with us in the 7 o'clock hour as well. The 10-year yield prints of 5%. Good morning from New York.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance. Good morning, everyone. Jonathan Farrell, Lisa Bramowitz, and Tom Keene. Mr. Farrell, on assignment. The assignment, he's got an umbrella in his cocktail.
The assignment's a really nice one. I would like to go on a similar type of assignment.
It's like one of those places. It's not a cruise ship. I asked him, he says, Tom, I don't do cruise ships. Can you see Farrell on a cruise ship?
He's made it very clear how
he'd be up with a captain of the cruise ship. Go to the port. Go to the Starbucks.
Oh, yeah, you think so? No, I think that he'd be hiding in his room. Please don't talk to me.
A wonderful week's rest here. Pulling the short straw. Manus Cranny joins us, and this is well-timed with all of his work for Bloomberg in Dubai and as well. I'm going to do a market check right now. It is a quiet Monday, but it's also an historic Monday. The 10-year yield within the last hour prints of 5%. We are well through that to a 5.01 on the benchmark 10-year yield. My eyes are failing me right now. I'm going to go to a 5.16% on the 30-year bond. For those keeping score, the 30-year mortgage Friday settling at 8.01%. S&P negative 26. The VIX critically is well out over 20. We are at 22.84, up a full stick, and maybe that VIX is indicative of the tension that we see. Dollar fractionally stronger. Oil 92 on Brent. Crude as well. An extensive under surveillance this morning. Lisa, what do you got?
Well, and I will just note, just to follow on with the yield discussion, we are up 1 full percentage point on the 10-year since August. We are up 40 basis points in the past week, just giving you a sense of the trajectory. Under surveillance this morning on the geopolitics side of things, Israel holding off on a ground invasion of Gaza as diplomatic efforts continue to secure the release of more hostages. President Biden has been speaking with all of his counterparts, Canada, UK, and European leaders, all trying to prevent the conflict from spreading. Biden pledging a, quote, continued flow of aid into Gaza after already what we've seen crossing from Egypt.
I sat in a shopping mall in Dubai years ago with our great team that opened our Dubai office next to the Ritz-Carlton. I could show you heavy lifting. And they said, Tom, you've got to go to Beirut and understand the oddities of Lebanon. Manus Cranny now on the oddities of the modern Beirut and the northern border of Israel. It's surreal, isn't it?
It is very surreal, and I've just come back from Lebanon. I spent 10 days there at the beginning of August, and the communication that I've had from people there is incredibly passionate. The risk to the world is that the proxy